central bank, a society, a politician can reflate an economy?
No, is the short answer, Tom. I mean, in theory, it is. In theory, central banks can always achieve the inflation rate if they only do enough, but I felt I had to give up on that point of view after watching Japan and now the U.S. and Europe in recent years. The analogy, I mean, Olivier wrote a piece recently, which you probably saw, on the risk of a small inflation in the current situation, and I'm not sure that constitutes a reflation in the sense you mean it. You know, it fundamentally comes down to how much of a real shock you think this is. If you're in a secular stagnation kind of world, to use another term from a different colleague, right. You know, it's much harder to get the inflation back. Well,
Blanchard and Summers, hysteresis, and is just creeping in there, folks. This is a fancy word for the effect of long-term employment. Where are you on this, Adam? Are we really beginning to see a pernicious effect of unemployment? Mark Zandi yesterday, 10% unemployment. He says, no way, the real statistic's 14%. Is that Blanchard and Summers hysteresis?
I agree with Mark Zandi that the real statistic is much higher. I mean, I think the important thing is what the Fed shift that Chair Powell and others have been speaking about, and which you know Tom has been building for many years, which is to focus on broader measures of labor market participation and employment than just the U3 or even the U6. I mean, your old friend Danny Blanchflower and I put out a piece 5-6 years ago telling people to focus on the level of participation as the predictor of inflation rather than trying to divide up long-term unemployed and out of the workforce, because people aren't really out of the workforce. The flip side of that is scarring may not be as bad as we think, and this is what we've seen, that if you run the economy hot enough, long enough, you can bring people back into work.
Are they going to spend money, though? I read your notes on inflation, Adam, with great interest. A lot of people are buying gold right now. A lot of people fear that they are going to need to focus on real assets because ultimately monetization is coming. You think that they're missing something, and that is demand. What will it take for demand to come along with the rally in the monetary side of the equation? What is it going to take?
It's a really good question, Guy. This is why before the break we were talking about some of the structural aspects, as you rightly summarized it, in the economies, because you know the economy can come back at a V, or what I've called a reverse check mark, which is a little more slowly. The question is when the check mark plateaus, which is how much of the real economy has to be reallocated. And you know, you can have pent-up demand come back in those sectors that are not having to be massively restructured. But what happens to those sectors that are? And you know, for every Zoom, you've got, as I think was announced earlier this block, 83% of New York restaurants can't make the rent. You know, so the demand is going to be lacking for a while. You're going to have ongoing drag from underemployment and unemployment.
So does monetization matter? Are those that are buying gold making a mistake?
I think those are two separate questions. I think monetization ultimately doesn't matter very much when underlying demand is cratering velocity, if you want to put it in Milton Friedman terms, if there's no risk appetite. And, you know, fluctuations day to day, as you're rightly covering today, that it's, as you and Tom keep saying, it's a risk-on feeling. But in the long-term perspective, getting a real interest rate of 0.09 is not very much. So is gold a mistake? Usually, gold has no intrinsic value. But the point is, people may be in gold as a alternative to a great deal of political uncertainty and the desire to have a little bit of diversification out of dollars without it necessarily being an inflation hedge. It can just be a generic hedge.
Well, this has been wonderful. Adam Posen, thank you so much for joining us this morning on Europe and on this fascinating idea of reflation. It's out there somewhere. You heard Dr. Posen say, maybe not. Coming up later, this is really, really an important discussion. Gideon Rose a Foreign Affairs magazine, and it's no surprise, it may be the essay of the summer on the pandemic depression. This is must watch. Gideon Rose. We'll do that in about 10 minutes. This is Bloomberg. Stay with us.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
We're looking at also considering a capital gains tax cut, which would create a lot more jobs. So we're looking very seriously at a capital gains tax cut.
Good morning, everyone. Bloomberg Surveillance. I was just looking up a Washington Post article which really defines Mark Meadows' place in the silence that we hear in Washington on the stimulus. To give us perspective on this and 47 other themes in a not quiet Washington, Kevin Cirilli, our chief Washington correspondent. I thought the Washington Post summary here, Kevin, was really remarkable of Mr. Meadows' effect on this whole process. And, you know, I guess it's unfair to say he's Tea Party, but he's House Freedom Caucus. Have the conservatives of the Republican Party finally taken over the Republican negotiating process on fiscal matters?
Not as much as they would like, to be quite candid with you. And in fact, over the weekend, I was talking with some senior Trump sources who really noted the differences in ideological economic negotiating tactics between Secretary Mnuchin and Mark Meadows. I mean, Mark Meadows is someone who really does understand the dynamics of the House Republican caucus, but quite frankly, the House Republican caucus, as one staffer put it to me yesterday, is not negotiating at all in these negotiations because Speaker Pelosi obviously has the majority party. So that said, I don't want to underscore the influence of Mark Meadows. He is someone who has deep understanding of the Capitol and of Democrats and of the various back and forth.
Right.
But I think the Freedom Caucus right now is not as influential as it was in these negotiations.
Guys got 14 questions smarter than me. Kevin, let me ask you a short question. What exactly is going to happen today in this silence?
In this silence, it could be an opportunity for the vice presidential pick for Joe Biden. Now, based upon my reporting, I can tell you that we're anticipating that pick to be sometime within the next couple of days. But in terms of the negotiations between on Capitol Hill, I'm not really sure. I mean, they are at a stalemate, and that there doesn't seem to be an urgency, and there doesn't seem to be any potential breakthrough. A significant breakthrough in the short run.
Kevin, let's talk about that VP pick.
Yeah.
Is the name that comes out of the hat likely to be the next but one president of the United States? Just in terms of order of magnitude of what is about to happen, how should we perceive it?
You know, it's a great question. I think it really depends, so I'm going to dodge, but I think when I look at some of the names on that list, whether it's Senator Kamala Harris, whether it's Susan Rice, whether it's Val Demings, Karen Bass, and other individuals who are on that list, Guy, you know, look, there's no question that whomever Biden chooses as his running mate will definitely have political staying power. Whether or not they utilize that political capital to launch presidential ambitions of their own, I think it's too early to tell.
In terms of the implications for this race, how significant is it?
Massive, massive. I mean, you think back to how vice presidential picks have influenced the dynamics of the race over the last several decades. I mean, and really this is such an important pick, whether it's John McCain selecting Sarah Palin or whether it's President Trump selecting Mike Pence. I mean, all of these picks are chosen for various political, policy, and personality reasons. And so whomever Biden does choose, she, as he has said he's going to pick a female, she will no doubt face criticism coming from Republicans, but also will have to counter Biden in terms of what his critics would say he lacks on the ticket.
It is beautifully explained, Kevin, and I'd also mention Michael Beschloss's wonderful article in the Washington Post today, going back over this. I remember, Kevin, the roar through the office I was in when Dan Quayle was selected as a vice president. You just went right down the office, the roar when they selected Dan Quayle. This was a few years ago, just a few years ago. Mr. Cirilli, our chief Washington correspondent on the vice presidential watch. Coming up, he knows what it's like to pick a vice president. Eric Cantor, Miles on Balance of Power with David Weston. Eric Cantor on the vice presidential derby. Eric Cantor on Mark Meadows. Eric Cantor with David Weston, the 12 o'clock hour. This is Bloomberg. Good morning.
you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg Surveillance. Good morning, everyone. Greatly appreciate your attendance. Guy Johnson in London, Tom Keene in New York. And here is your pro tip for the summer, because the college brats are home and they're not going back to school. Get them a prescription to Foreign Affairs magazine, throw it at them, hit them on the head with it, and say, read Reinhardt and Reinhardt. Gideon Rose joins us now from Foreign Affairs magazine. It is a spectacular, thoughtful issue. The world Trump made, it has Ben Rhodes in it as a Democratic bad guy, but a lot of exceptionally thoughtful articles on religion, and one by Ambassador Haas as well. Gideon, congratulations. What did you have to do to get Reinhardt and Reinhardt to write about the pandemic depression?
It's always tough to get them in, but delightful, because they are gloomy Gus's but brilliant economists who are the experts on financial problems in these kinds of respects. And what we're seeing, they argue, is going to be not just a pandemic depression, but then a pandemic financial crisis following the depression, because of all the debt that's been occurred, and people haven't factored this in. They argue we shouldn't confuse a rebound with a recovery, and it's going to be a long, hard slog. It's always bracing to read them, and this time it's
exactly
a piece of bad news for the long-term future and for those who want a quick return to anything we used to consider normal.
Right, and this is just fascinating, folks. That's probably, I don't know yet if it's my essay of the summer, but I think Gideon Rose has done it with Carmen Reinhardt taking over as chief economist at the World Bank, and Vincent Reinhardt, flat out our best researcher out of the Fed for decades with Alan Greenspan. It's an exceptional essay. The heart of the matter there is the brilliant quote on Henry Adams, where we're managing for our hatreds. This president has been criticized as a president of grievance. Can the next president, whether it's a two-term Trump or a one-term Biden, move beyond a president of grievance?
Well, it's actually a great question, because that turns out to be the central question. Running throughout the entire new issue is basically a contrast between leaders who have tried to use the crisis as an opportunity to bring their countries together and the world together and constructively address actual problems their citizens face, and leaders who have tried to shirk responsibility from that, shirk the blame, cast the blame on somebody else, and basically do smoke and mirrors, but not focus on constructively solving problems. And the real question is the motivation of the leaders. We've heard long ago the old phrase that character counts. And the way that comes down to me is the government actually trying to solve the problems of its citizens. You see this from Lebanon to the United States to Brazil to elsewhere. Governments that are not solving their citizens' problems are facing increasing unrest for somewhat legitimate reasons.
Gideon, can you destructively solve problems? In the past, we've seen this. Depressions have ended in wars. Is that our trajectory?
Well, there are two different questions there. You can destructively get rid of the obstacles to solutions. Usually there have been issues that are long-term big problems like inequality or structural racism or lack of multilateral cooperation on various kinds of international agreements of various things. All those kind of things can be locked in normal politics in a stalemate. And a crisis, or somebody who sweeps it all clean like a Gordian knot and basically establishes an entirely new slate or a clean slate, that can pave the way for constructive action. But by itself, the destruction doesn't usually do it unless you're in a situation in which what you were destroying was purely bad. Some of the regulatory pruning that Trump is doing domestically makes sense, and some of stuff like that is good. But otherwise, you need to construct afterwards. And with regard to war, that's the one saving grace in this. Barry Posen did a piece for us early in the spring, which basically argued because this was hitting everybody the same way, it was not going to actually lead to interstate war so much as internal turbulence. And I think that's really the big story in many respects that you've seen over the last 6 months and probably should continue to expect over the next stretch of time, which is not so much interstate war, but domestic tensions, particularly in countries that have not been able to summon the leadership, social trust, and institutional capacity to respond well to the crazy challenges that we're facing in these unprecedented times.
Gideon, stick around. Much more still to discuss out of the current issue. Gideon Rose, Foreign Affairs Magazine editor, thank you very much indeed. Quick look at what is happening with the markets right now. Tom, European equities on something of a tear today. You can see we're up by around 2.1%. The mix is interesting. I keep highlighting Nestle because it's adding a lot of points right now. The euro's trading higher. Yields are moving a little lower, as you can see. We are certainly seeing interesting moves in the bond market. Gold also under pressure, Tom.
Yeah, there's no question about that. Lots going on. Futures up 24. Dow futures up 287. We're in a full stick on the VIX. To get under 20 would be extraordinary as well. We're going to continue with Gideon Rose of Foreign Affairs Magazine. Also coming up later, Glenn Fogel of Booking Holdings. This is Bloomberg. Good morning.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the Bloomberg First Word News. President Trump's end run around Congress on virus relief failed to get the stalled negotiations going again. Republicans and Democrats remain deadlocked over an aid package, and there's no sign they're ready to resume talks. Both sides agree that enhanced jobless benefits should be extended, but Republicans balk at a Democratic proposal to give money to state and local governments hurt by the coronavirus. Joe Biden could name his running mate as early as midweek. Bloomberg's learned the Democratic presidential nominee has finished interviewing all the top candidates. Biden promised in the spring that he would pick a woman to be his vice presidential candidate. And Vladimir Putin is claiming victory in the race to develop a coronavirus vaccine. The Russia leader says the country has come out with a vaccine that offers a lasting immunity. Putin says one of his daughters has been inoculated. However, the Russian vaccine was registered before phase 3 trials. Those trials normally last for months and involve thousands of people. The British government is overhauling the country's highly criticised programme of tracing the movements of coronavirus patients. There's been a centralised army of officials looking for people who come in contact with infected people. That's being replaced by locally based teams who will knock on doors in their neighbourhoods. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Guy.
Ritika, thank you very much indeed. I want to back up a bit, go to that penultimate story, the one about the Russian vaccine, and bring in Foreign Affairs' Gideon Rose into the conversation. Gideon, are the life sciences being weaponized? And if they are, who has the biggest bazooka?
They're being distorted and manipulated rather than weaponized, because we're not trying to kill people. That's what actual weaponization of the life sciences would mean in bioweapons programs. What we're talking about here is trying to figure out jockeying for advantage on the positive side of getting the benefits from a vaccine. The ridiculousness of all this, the absolute absurdity of all of this, is pointed out in a wonderful piece in the new issue by Tom Boyke and Chad Brown against what they call vaccine nationalism. And basically, this is a classic example of a collective good that will benefit everybody. The more we share, the more the doctors follow and the scientists follow their logical goal and procedure of collaborating with each other across disciplines, then that's how you're going to get a good, effective medical scientific result as quickly as possible. And the breaking down of this into national champion lines so as to gain a short-term immediate advantage of the current pie and lock down a sort of mercantilist supply of stuff is just the exact opposite of what governments should be doing. And it's a wonderful example of how the medical establishments in each country are actually almost certainly behaving much more responsibly and wisely than the political leaderships in almost every country around the world right now.
But if you have a closed economy like the United States, if you are able to vaccine your population, your economy is going to be stronger, and that stronger economy is going to give you economic and potentially militaristic advantage. This has to be brought into the equation. If you think about kind of Clausewitz and everything being lumped into the same bucket in the way that Trump has done, this does seem like a logical way of progressing.
You know, if I were running the United States, I would try to reduce the scores of thousands of unnecessary deaths currently being caused by government malfeasance in not actually driving a good testing system, rather than try to continue to pin hopes for some future miracle vaccine and get some mythical share. There are things we could do right now to mitigate the crisis that we're not doing, and the governments that actually are succeeding in gaining credibility rather than losing it are focusing on those things.
Gideon, brief our audience worldwide
We are no longer talking
on Susan
about
Rice
if
in the
this,
need to have
comes
a
back to
vice
face the
president
justice
with a
system, but
foreign
how.
policy,
This is never
with a
going to go
national
away, and I would
security
just make
perspective.
that
Ben
appeal
Rhodes
to
writes up
my
the
American
Democratic
friends,
renewal. It's the usual
leaders in
thing you would
Washington.
expect from someone who served President Obama. But speak to Republicans and Democrats, speak to conservatives worldwide about a potential Vice President Rice.
So I don't do politics, I do policy, and I certainly don't do people that much. Traditionally, vice presidents don't have a whole lot of role in the administration's policy. They do what they're told by their president, and that's one of the conditions of getting on the ticket. So whoever the vice president is that Biden ultimately picks, they will execute Biden's foreign policy. I think that that foreign policy, frankly, is what almost all of any of the Democratic candidates, except possibly Sanders, would have picked. And it's basically a cross between the old liberal internationalism of, let's say, the Clinton era, combined with some of the new circumspection on things like trade that's characteristic of the Democratic left these days. But basically, you're going to have a non-interventionist, somewhat protectionist in old-time terms, but otherwise devoted to good old-fashioned multilateral cooperation for a little bit. The real question is, will the American public and new administration recognize just how much the rest of the world, and particularly its allies, are appalled by how it has behaved over the preceding 4 years, and do they realize how much ground has to be made up within the alliance? That's the big question.
Yeah, and what's fascinating there, Guy Johnson, and I think it really appeals to the United Kingdom as well, is the speed that this will be happening at, given a Biden victory. That's not a given, Guy, in the polls. CBS polls this weekend were a lot closer than people expected, but it'll be amazing, Guy, to see what happens in January, February, and even March.
Yeah, I wonder whether or not we are going to be able to return to the post-war kind of architecture that so many of us got so used to. You wonder whether or not, having broken it, whether or not it's actually able to be repaired, and whether or not actually that is desirable. Does the Second World War security architecture pass muster in the new era? I remember writing essays sort of 30 years ago when I was at university about whether or not NATO had a purpose. I still think we're trying to figure out whether or not there is an answer to that question in the new era. NATO keeps kind of reinventing itself. The post-World War security architecture and economic architecture continues to try and reinvent itself. But maybe we've broken it, and maybe that actually could be the kind of destruction that we need to see to create something that is more formidable, that is going to take us forward. Gideon, do we want that security architecture back? Do we want that multilateral economic architecture back? Or do we want something new and more fit for purpose for the 21st century?
Well, that's a great question and a great setup. That's what the lead package of this issue is all about. And basically, there's a debate between people who say we can't possibly go back, either from the right, the sort of saner Trumper types, who basically say we need to go back to a much more tough-minded, great power competition view of the world, and the people on the left, like Rhodes in the issue, or half the Democratic Party now, who basically argue that we can't just go back to the old ways. We need to be much more humble and much more, we need to check our privilege. The United States needs to check its privilege in the world, basically be much more supportive of the downtrodden, and work to reduce global inequality. And that only that can save our position. I personally tend to believe that it all depends on the election result. I think most of the world is holding its breath. They've understood that Trump is who Trump is, and that he has power in the American system, and they've reconciled themselves to the lack of guardrails on him for the duration of his term, and they're waiting to see how the United States deals with this. If the United States affirms this and re-elects Trump, the rest of the world will conclude, yes, okay, this is not just a temporary pause, but the new reality. And then you'll see a lot of marking up of policy. Then that means the end of the order. But if a Biden administration comes in and tries to make nice, then people will immediately give them a chance and try to make the marriage work again for the global kids of peace and prosperity. But whether that'll work or not, we'll just have to see.
Wonderful. Gideon Rose, thank you so much with Foreign Affairs Magazine. Just exceptionally strong this month. I can't say enough about his preparation for back to school for the collegiate set and the business set worldwide. The world Trump made. Coming up on the Open, I believe this is a property of John Farrow's. Look for Mark Kiesel of PIMCO, 9 a.m. This is Bloomberg. Good morning. Futures, I got to quote Dow futures for John. Futures are up 284 Dow points on the edge of 28,000. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Gideon, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Good morning, everyone. Bloomberg Surveillance. Guy Johnson in London. I'm Tom Keeney in New York. Risk on decidedly a full stick move in the VIX. 21.13. Yield higher as you'd expect. Gold crushed as we have a lesser negative real yield. Gold 1996 an ounce, even losing a few more dollars per ounce in the last hour. Right now on China, in the 6, 7, 8 stories of China, Carla Freeman joins with John Hopkins and their SAS, and she's also editor of Asian Perspective as well. Carla, what's the one thing you'd like to explain to any audience about Taiwan that we just don't understand? Beneath the radar, beneath the myths and the beliefs that we have about Taiwan, what matters?
That's a great question. That's a big question to start out with. Taiwan, of course, is a country that has limited international recognition because to have relations with the mainland, with China, you cannot recognize diplomatically Taiwan. Taiwan has managed to have a successful economy in the world, and it has preserved a very strong relationship with the United States, which has provided it with security to protect it against a threat of military action by the mainland China.
What is that game theory? If there is a legitimate mainland threat, what's the process you see? Does Taiwan defend itself? How do we defend them, either militarily or through the discourse that we have available in diplomacy?
Well, the hope was that diplomacy would prevail, and the United States has helped secure Taiwan by providing it with a de facto alliance relationship, but also by providing it with military equipment to give it a credible defense capability against a military threat from Beijing. But the hope was that Beijing and Taiwan would work out some kind of arrangement. So far, the cross-strait relationship has has continued to be tense, and although the economic relationship between Taiwan and the mainland has been has grown over the years, the vitality of Taiwanese democracy has been a bitter pill in Beijing, which had hoped to be able to bring Taiwan back into its fold.
Carla, good morning. Guy in London. How much of the diplomacy that you speak about happens on WeChat?
Oh, that's an interesting question. I'm not sure very much. I mean, WeChat is used for a lot of citizens to have a lot of discussions about different ideas. Very popular app in China, and even in the United States, there are a couple of million users. So there's a lot of WeChat is a popular app all over Asia, and I'm sure there's a lot of conversations going on all over Asia, even between Taiwanese and mainland Chinese using that app.
Are we heading for technological spheres of influence, and what are the implications of that?
It really looks like the Trump administration is pushing for some kind of technological decoupling from China. It began with a move on TikTok, but of course, even before that, Huawei. Now there are discussions about what might happen with WeChat and even Zoom, which is, of course, based in California, but was founded by someone who is a Chinese national. So concerns that...
Sorry, carry on. Finish the thought.
Yes. So there are concerns that that the U.S. is pushing for a tech policy that would literally decouple us from China, which would mean a tremendous change in the kind of open internet that we've built our economic architecture on around the world.
Yeah, and changes the flow of data in a way that I think could be really dramatic and not understood at this point. Carla, we're going to have to leave it there. Time beats us. Thank you very much indeed for your time. Carla Freeman of Johns Hopkins. Be sure to check out VRUS Go on the Bloomberg for the latest information, and make sure you as well tune in every day for Bloomberg's exclusive conversations with experts from Johns Hopkins University and like everything from COVID-19 to, as you can see, geopolitics. Coming up, David Grain, Grain Management founder and CEO. Looking forward to that conversation. This is Bloomberg.
We've been through a massive first wave of restructurings, and I think the second wave, which I believe will come, really depends on what we were just talking about, that many of the weaknesses at many companies have been disguised or hidden by very significant government support. As that support is withdrawn, or even as it's not continued at the same rate, the pressure on many corporates will become more manifest. And I personally, unfortunately, think that we will see another significant wave of bankruptcies across corporate America as that plays out.
Peter Orszag suggesting we're going to have a very tough fall. He's, of course, a Bloomberg opinion columnist, talking about that next wave of restructuring that is on the horizon. Orszag spoke exclusively to Bloomberg's Sonali Basak, and Sonali joins us now with another leader on Wall Street, David Grain of Grain Management, a private equity firm focused very much on the communications sector. Sonali.
Thank you, Guy, and thank you, David, for joining us today. David, you have $2 billion under management in the telecom space. You used to be a leader in the wireless industry also. Why are we having this conversation right now? Because we're talking about remote work. We're talking about getting access to education across America. There are these broadband deserts, as you call them. Why is this happening? What's keeping so much of the country from getting the infrastructure they need to be remote?
Well, first of all, thank you so much for having me on. Great to have a conversation with you. I think what's clear is that the economic and education differences that we see in different parts of the country really is mirrored by the dissemination of broadband and deployment of high-speed internet access in those areas. So as we think about our country in the 21st century and look back to the 20th century when electricity was not wide and far throughout the United States, there were vast differences that we saw in effectively deserts in areas where electricity had not made it there yet in the early portion of the 20th century. And I think we're seeing the same thing today when it comes to broadband.
Now, in your view, why is this causing such vast economic disparities?
Well, think about it. When you think about the job markets and people that want to start businesses or large companies that are running their businesses, they really need to have access to high-speed broadband. And if there's an area where the providers have not yet deployed those services, those businesses are really not going to crop up and grow. Similarly, as you think about the schools, now that we're all working from home, we're learning from home, we're entertaining ourselves at home. If you happen to be in a low economic area outside of the major metros, it's highly likely that you don't have access to high-speed internet. And as a result, your children are going to be at a disadvantage when it comes to learning at home. And your businesses are going to suffer if you don't have access to the web.
Now, David, we know that this is a problem in terms of getting people access more generally throughout the United States, but we also know that this is a point of competition between the U.S. and China as well. How do you see that competition playing out?
So it's interesting, notwithstanding the fact that we have a fairly sophisticated communications infrastructure network around the United States, we're still pretty far behind, partly because there hasn't been the allocation of spectrum quite as there has been in other markets. The FCC, I think, is addressing that with some auctions that are going on now and those that will go on later this year. But over time, I think what's clear is if we allow the specifications and standards to be defined by someone else, we lose the control position to help guide the future of broadband communications. So I think it's imperative that we jump back into a leadership role. And I think a lot of the conversation that we've heard about Huawei and China has to do not only with security, but also really that leadership and defining the specifications.
Speaking of leadership, you know, in 2011, President Obama at the time appointed you to the National Infrastructure Advisory Council. When you think about infrastructure now, you've been talking about how it's been widening inequality. How do you think that these issues are going to play out in these upcoming elections?
Well, it remains to be seen, but I think there is a shared perspective on both sides of the aisle that making sure that we're positioned to be very competitive with other countries in the world, investing in our infrastructure, particularly our digital infrastructure, has to be a priority for us to be able to live, learn, work, and play in ways that give us all the opportunities that the rest of the world has. So my view is that we're going to need to see something from all the candidates that lays out exactly how we're going to both fund, invest in, and deploy more advanced infrastructure, particularly in the digital realm.
And one more real quick for you here, David. You're an infrastructure investor. You're a communications investor. What is the investment thesis here? How much money can you put to work in this industry right now?
Well, it's interesting. McKinsey has estimated that there will be roughly $500 billion per year for the next decade invested in communications infrastructure globally to get these networks ready for 5G. So that's $5 trillion. That is also tied to an estimate that Cisco put out that we'll see global mobile data increase 8x over the next decade as well. We think that number is low, and as a result, the capital that will be deployed is going to be higher. So as a result, there is plenty of opportunity to deploy capital in this space.
David, thank you so much for joining us. That was David Grain of $2 Billion Grain Management. Guy, back to you.
That was a fascinating conversation, Sean. Thank you very much indeed. Thanks to David as well. Really interesting to hear his take. We're going to carry on the conversation in just a moment. Surveillance is not done just yet. Extended programming about to start. Tom Keene, John Ferro, Lisa Abramovich coming up as we carry on the conversations. Tony Crescenzi of PIMCO is going to be joining the team today. Let me just recap where we are in terms of the price action, because today I think is a day that is worth paying attention to. I have to say volume's picked up a little bit. We're still down, but it's August. But relative to yesterday, things have certainly picked up. But as you can see, stocks certainly moving higher here in Europe. Expectations that we're going to see a similar story over in the United States as well. The euro's catching a bit of a bid against the pound. That's not a surprise. As I say, surveillance continues. This is Bloomberg.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
Officials basically beg for fiscal policy the way they are now.
Markets can probably continue to grind higher from here as long as we don't have a big negative surprise.
The question is, are we headed towards a cliff?
I think we are certainly in the midst of a slow-moving policy mistake.
Hong Kong is, for all intents and purposes, now part of mainland China.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowitz was meant to have the week off. Tom Keene, she missed us so much she came back. What a beautiful thing. This equity market within 1% of record highs on a 7-day winning streak on the S&P 500.
John, she comes back to a big market lift, a risk-on lift. John, I'm going to let you give me the 8 reasons why we're lifting this morning. But part of this is maybe the pandemic. Some of the pandemic statistics on case dynamics and even death dynamics are really remarkably good.
I'm not going to give you a reason because this market might move in the next hour. Futures already rolling over a little bit, up 20 on the S&P 500. But the run of gains, Lisa, has been remarkable in the face of talks down in D.C. totally stalling.
Completely agree. Also, the rotation that you're seeing yesterday, the NASDAQ underperforming significantly, which a lot of people are thinking as a positive. Yeah. Going forward today, we're going to get some read on the economy in the United States, 8:30 a.m. We're getting U.S. producer price index data. Very interesting to see, John, this divergence between inflation expectations among futures traders and break-even traders versus the absolute bond yields, which keep falling. Then at 10:30 Eastern, State Secretary Mike Pompeo speaking at an event in the Czech Republic. We're not necessarily that interested in the topic of that speech, but we are interested in anything he has to say about China. And 1 p.m. U.S. 3-year treasuries are going to be auctioned off. Interesting to see how much demand there is, John, at a time where the actual deficit is so unclear, the actual financing needs, because that stimulus package, that fiscal support package, is sort of missing in action right now.
Well, let's get to the price action, shall we? This morning, equity futures are grinding higher, up 20 on the S&P 500, positive 0.6%. In foreign exchange, the euro stronger, back again. Euro dollar 117.87, up 0.4%. There is a lift in Treasury yields for a third session, and we break 60 basis points on a 10-year to 0.6%. Tom, I'll be the one to ask the first stupid question of the morning. Does supply matter? Lisa mentioned the amount of supply we're getting this week. Does it matter? The reason I ask is because this administration cut taxes back in late 2017 with a 10-year at 250. Here we are adding tons of debt with a 10-year at 60 basis points. Why is that a dominant force to think about for the years to come?
This is an important conversation, at least a 3-hour chat. Maybe we can do this later, John. Adam Pozenon in the previous hour made very clear he's worried about demand. He's worried about a decrease in demand. And certainly in the British statistics earlier this morning, John, on jobs, you saw that. Look at the real yield come in, John. I mean, we had a grim negative real yield. We've done better by 9 basis points, and it absolutely crushes gold. That culminated, John, where I went from triple leveraged all cash and walked in the door at Tiffany's. It has not worked out.
We've deployed some capital, but on jewelry.
At 2,400 the ounce.
So
and we're
Mrs.
down
Key's sharp, isn't she?
Yeah,
she really is.
$19.99 the ounce. We breached 2,000 on COMEX gold.
Almost Gordon Brown-esque there, Tom. But reverse engineering it. We can talk about that later. Let's bring in Tony Crescenzi, shall we? PIMCO generalist, portfolio manager. He joins us right now. Tony, fantastic to catch up with you, sir. Brilliant as always. Does that Treasury supply matter this week?
It has mattered for years in the sense that people always ask, when will things blow up? And I wrote a book about this, the idea of a Keynesian endpoint. Greece reached a Keynesian endpoint almost a decade ago. In other words, where it couldn't stimulate its economy through fiscal stimulus. It couldn't borrow from the world. It had to find another balance sheet. Of course, that was the IMF, the ECB, and of course, the rest of Europe. But it has mattered for years in the sense that the U.S., Europe, and Japan haven't been able to engage in transformative activities, which is to say infrastructure or investing in people and things. Instead, monies have gone mostly toward consumption. Think of the recent stimulus plan. It's the monies that have been distributed are absolutely vital. But is there any major project being created in America today to help the future?
You know, I think you're dead on, Tony. I think you're absolutely dead on about the lack of application to long-term projects and to invest in the country, et cetera. Maybe we can see a change of that in the next year. Tony,
except in Europe, there's a little bit of that.
Oh, yeah, in Europe, okay, I'll give them some credit on that, and I need a fifth tunnel. You know, we need a tunnel to Staten Island, Tony. That's what we need to do for you to get quicker to Staten Island.
I have long said, instead, we've got the 56-year-old Verrazano Bridge that links Brooklyn to Staten Island.
He's got to
and lots and lots of cars.
The show's falling apart at light speed here with Tony Cosenzi. Tony, I want to ask you Lisa Abramowitz's question, which is really important, actually. I have never, ever, ever cared about Treasury supply, full faith and credit supply. I don't care about auctions, and yet now I really have to, don't I? I mean, things have changed.
It may be, but remember also the world population is another angle. World population's aging. What do we do as we age? We move up in the so-called capital structure. We want less and less risk. So there's a lot of money that still flows into bonds despite the low yields because people simply want to protect their savings. But it hasn't mattered. Let me give you summer reading, Tom. 3 books real quick, 30 seconds that would describe the current situation. Let's go back 250 years and use Adam Smith, The Wealth of Nations. The idea of confidence. There's always a need to bridge the gap between the current situation, which is bad, and the future, which hopefully is good. In The Wealth of Nations, Adam Smith said basically people will go out each day and try to do better for themselves and thereby build the wealth of nations. Then secondly, let's go back about 150 years. Walter Burgard, of course, Lombard Street, liquidity, just lend where it's needed. Central banks have done that, and that's where all this money's come from. Finally, there's been a reduction in uncertainty. Frank Knight, 99 years ago, in a book, Risk, Profit, and Uncertainty, wrote a book about the idea of uncertainties being so large that people disengage sometimes. Lately, of course, that was the case. March, certainly, there was what they call a Knightian uncertainty period. Now it's more, and it was radical. Now it's a little less radical.
Yeah.
And so that dissipation of radical uncertainty is helping markets. So liquidity, confidence, and a reduction in radical uncertainty is what's driving market supply. Doesn't matter right now, so to speak, but probably will matter more in the long end where the pivot point for the yield curve is.
I will
which I
say,
can describe if you want.
Tony, Tom did read The Wealth of Nations, and he promptly took the message and went out and bought jewelry, as we learned this morning. I do want to talk about Europe. You're saying that the European plan to possibly invest in infrastructure is superior to what we're seeing out of the U.S., where there continues to be gridlock. And yet a lot of investors have piled into the Europe story. Do you think it has gone too far based on the fact that they don't have the tech names to basically support this into the new era?
Great point, Lisa. In fact, when you're thinking about investing over the next 5 years and which equity market to invest in, you probably want to think away from Europe and toward the U.S. and Asia, because a lot of the money, about 30% of the 750 billion euros in grants and loans that were recently approved by the European Commission, will go toward green projects. A lot of those green projects, call it, let's say, electric vehicle charging station, require the use of semiconductors. This will require mining and just technology. So the semi sector could grow 20% plus for the next 5 years, but the European companies aren't in that realm like America is and Asia and other parts of the world. So it's not going to be the place where money flows, and it will affect the euro over time. In fact, it will keep it from rallying more than it otherwise would, because money won't flow into technology there, it'll flow elsewhere. Great point.
Tony, let's talk about credit as well. Lisa's going to love this one. Last week, the high yield issuance we saw, 40% of it priced with a yield of 4% or less. And Lisa, I know you're going to want to do this, so I'll let you do this. But the issue that we had yesterday...
It's okay, go ahead.
You can do this. Is that even high yield?
Okay, wait, hold on a second. For everyone who doesn't know what we're talking about.
I don't know what we're talking about.
Okay, so here's what we're talking about. There was a company, a junk-rated company, that sold a bond with a coupon of what, just north of 2%? Is that right?
I believe so.
2.85%, I believe.
On 10-year notes.
On 10-year notes, this idea that it's the lowest ever coupon on a high-yield bond. All right, John, back
They
to you.
make aluminum packaging, Tony. Huge demand for it right now. I'm trying to understand. It's just below investment grade. What is high yield anymore?
Well, of course, it is all relative, but one has to, high yield, of course, is anything below BBB rated. And keep in mind, in 2008 and 2009, BBB rated securities for investors in them, 99.5% of them got their money back. The long-term default rate for all corporate securities is about 1.5%, but that includes high yield. So investors are willing to take the risk because they, generally speaking, will get their, his or her or its money back. But one has to be very scrutinous now. There's been a lot of debt issuance. Tom talked about debt issuance by the Treasury, but it's been also a massive corporate bond issuance. There are lots of Treasury securities outstanding, lots of corporate bonds outstanding. And the stress in 2008 and 2020, they have a common thread that they both ended both cycles ended chaotically. Why? Because the system, financial system, the principal to agent system, meaning when there's one seller, they typically go to an agent, so who is the go-between, the intermediary. But the intermediary isn't playing the role that it traditionally played, partly because of regulations, probably because of changed business models. And so be careful now, because most cycles are probably going to end chaotically. So what an investor wants to do is have a little more liquidity, have more agility and more resilience in the portfolio.
Hey, Tony, great to catch up. As always, Tony.
Thanks, John, Tom, Lisa.
Good to see you. Good to see you. Tom, did you ever think we'd sit here and say that a high-yield bond, a 10-year issue with a yield of 2.875%?
I remember really lovely annuities at 7, 8, even 9% at the time of inflation. But John, what I would go to, and it goes to Tony Crescenzi's wonderful work, and also Mr. Gross from a few years ago at PIMCO, which is this phrase, financial repression.
Yeah.
And some of the distortions you get are a high yield bond, whatever we're calling it, under 3%. That's absolutely bizarre. And you know, on a mathematical basis, John, it's just outright frightening.
Worth pointing out as well that high-yield spreads still are well off the tights of the year as well.
Yeah.
All the more remarkable to see that issue in the last 24 hours. Coming up on the program, we'll talk about the economy with the wonderful Diane Swan, Grant Thornton, chief economist, joining us a little bit later this morning. Looking at your equity market, it is a lift stateside, up by 0.6% on S&P 500 futures, coming into the session today within 1% of record highs and on a 7-day winning streak. Outside of the US and Europe, that's where the big gains are. On the equity benchmark in Frankfurt, Germany, the DAX up by 2.7%. From New York this morning, good morning. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. President Trump says he's seriously considering a capital gains tax cut. He told reporters it would create a lot more jobs. The president can't cut taxes on his own, but some advisors say he could issue an executive order that adjusts the original price of an asset when it is sold, so no tax is paid on appreciation for inflation. The Trump administration reportedly may prevent citizens from returning to the U.S. temporarily if there's a chance they have the coronavirus. According to the New York Times, the ban would apply to permanent residents too. Federal agencies have been asked for feedback on the proposal. And in Seattle, the police chief has resigned after the city council voted to eliminate 100 officers and cut the department's budget. It's the latest move by a local government to cut police funding in the wake of protests over police killings of black people. Seattle's mayor warns the cuts would jeopardize public safety. And in the UK, employment in the second quarter fell by the most since the financial crisis. The number of Britons with jobs declined by 220,000. That was the period when the coronavirus lockdown restrictions were most severe. It's likely matters could get worse. The British government will start gradually withdrawing its support for wages starting this month. It's an early loss in a court battle that the gig industry can't afford to lose. A judge has ordered Uber and Lyft
to convert their California drivers from independent contractors to employees with benefits. The ruling won't be the final word, and both ride-hailing companies plan to appeal. Reclassifying the drivers could force the companies to pay overtime and healthcare benefits. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Looking at also considering a capital gains tax cut, which would create a lot more jobs. So we're looking very seriously at a capital gains tax cut, and also at an income tax cut for middle income families.
And with that, I think it's fair to say the fiscal talks on Capitol Hill have stalled. The President of the United States from New York. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market shaping up as follows. 2 hours, 12 minutes away from the opening bell this Tuesday morning. Equity futures up 20 on the S&P. Can we make it an 8th straight day of gains on the S&P? Currently, the longest daily winning streak going all the way back to late 2017. In the bond market, a lift for bond yields, for Treasury yields as well, up 2 or 3 basis points on a 10-year, back through 60 basis points. In foreign exchange, all about dollar weakness through G10. The euro is firmer. The only currency the dollar is doing better against this morning in G10 is the Japanese yen. That speaks to the risk appetite improving. We are just south, Tom, of 118 on euro dollar at 117.91.
Yeah, markets on the move, not like they were 2 hours ago, but nevertheless, there we are, a little bit risk on. In the silence of Washington, as he always verbose, Kevin Cirilli, our chief Washington correspondent. Kevin, I want to go to the moment. Without question yesterday, the moment for me was Mark Zandi of Moody's framing out a 10% unemployment rate is actually 14%. Mike Allen this morning at Axios has a long dissertation, the granularity of food kitchens around this nation. Reinhardt and Reinhardt are talking about the pandemic depression, and we have radio silence. How will it be broken?
Well, I think in terms of how the markets have reacted during the past couple of months, contrasted with what you just laid out for the middle class and the lower middle class in this country, are two incredibly different worlds, to say the least. And I think from a Washington perspective, inside of the Beltway, it's two very different ideological camps that don't see any incentive for compromise. Compromise right now is not something that would be celebrated amongst the various contingencies of the parties. Now, yesterday when I was speaking with sources, Tom, I can tell you that not only are they at a stalemate, but it really again continues to come to this notion of whether or not there's really any calculation to have there be some type of broad sweeping deal. I keep raising this issue of where is the Gang of Eight? Where are the gangs, so to speak, for there to be thrown into a room and to look at a compromise, and that just doesn't seem to be an incentive to do so.
Okay, but the tension here, and everybody this morning, folks, is talking about the wonderful Washington Post article on Mr. Meadows. Is the president tilting to Mr. Meadows, or is the president tilting to Secretary Mnuchin?
That's a great question, and it's a question that I put to my sources. I think that both of them have the president's ear, but in terms of understanding the Capitol Hill dynamics, Mark Meadows is obviously a former congressman. He's obviously one of the former founders of the Freedom Caucus, which is the ultra-conservative fiscal wing of the Republican Party. But in terms of those Republicans right now having an opportunity to really negotiate with Speaker Pelosi, they're the minority party. So as a result of that, they're not really needed in terms of, or rather their voice is not just able to be as loud in those negotiations. However, he does come with him and bring with him expansive legislative experience. And as for Secretary Mnuchin, he's always been seen much more as a middleman as it relates to dealing with the Democrats. He is someone, based upon my reporting, who I can tell you has a working relationship with Speaker Pelosi.
If you speak to anyone from the Wall Street crew, Kevin, they'll tell you the same thing. $1.5 trillion deal, it gets done eventually. Is anyone down in Washington thinking about the prospect of no deal ahead of November?
No. And I think, you know, and I think inside of the Beltway, it's been remarkable to see just how, in the zeitgeist, to use Tom's words, there.
I'm placing a new order to sell short Japanese yen at 106.091. Orders placed to sell short at 106.091.
Teachers, everyone is really on the same page that some type of more relief. And let's not forget, yes, Republicans are talking significantly less than what Democrats want, but it's still $1 trillion, which before all of this was still a hefty chunk of change.
Kevin, you said that Mark Meadows represents the ultra fiscal conservative wing of the Republican Party. How does that wing of the Republican Party feel about President Trump's proposal to cut the capital gains tax as well as middle class tax cuts, given the fact that that would also add to the deficit significantly?
Not good, but I think that they also understand, Lisa, that in terms of where the president is headed right now, he was.
Short position open for Japanese yen at 106.091.
But in terms of, if you look at the estimates, and these senators and lawmakers, I mean, they're reading the same economic reports that you know the Wall Street's reading. And I think if you look at the latest estimates of growth for 2021 and the expectation of a vaccine, they understand that some more stimulus is needed.
Dan Quayle, Mike Pence, really? That's what the reaction was. Are we going to get a really on the VP stakes, Kevin? Really?
We're gonna have to wait and see. I think if there's anything that the Biden campaign wants, it's to have a lot of excitement, to have a lot of enthusiasm, and to be able to contrast their ticket with diversity, with an element of historic glass ceiling breaking, and they want to contrast that with the incumbent candidate. In contrast to that, very early on, I'm told by sources on the president's reelection campaign, they have been looking to define whomever Biden picks. And again, we're still, I joke about it, but we're on full VP watch this week and around the clock.
Kevin's got to sleep in the building. He's not allowed to leave the camera until that headline drops. He can't laugh because he knows it's true. It's Kevin Cirilli down in Washington, D.C. Kevin, it's great to catch up with you, sir. Tom, do we need to come up with a new definition for a fiscal hawk? I mean, I've laughed through that conversation. We're sitting there calling these people fiscal conservatives. No, they've got a $1 trillion deal on the table.
I grew up in the land of Barbara B. Conable. Before I ran the World Bank, John, he was House Ways and Means Committee. And the conservatives and the hawks of another time and place always negotiated, always found a middle ground, and there were some real arguments along the way. This is totally different. This is the detritus of the Tea Party, the House Freedom Committee. This is a completely different tone that centers around my way or the highway.
Tom, I think it's fair to say if fiscal conservatism in 2020 is a $1 trillion bill, then the fiscal hawks lost the argument. If that's what we now call fiscal conservatism, we need to get a little bit real about that. Governor Cuomo yesterday, Tom, handing the drowning man an anchor. That's what he said about the president and what he did over the weekend. Pretty much every single Democratic governor came out and said something similar. And this is the current battle, isn't it? It's the president versus the states.
I can't convey enough, folks, the anecdotal, out in the zeitgeist, the anecdotal evidence we're seeing of a real slowdown. Adam Posen was just positively grim about it, John.
Don't see it in the equity market, up 18 on the S&P 500. We advanced by 5, call it 0.6%. Up next on this program, Diane Swank of Grant Thornton, the chief economist from New York City. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Risk appetite looking good this morning. Good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. This is Bloomberg Surveillance for our audience worldwide live on Bloomberg TV and radio. Here's your price action this Tuesday morning. For equities, it's 7 straight days of gains on the S&P 500 into Tuesday. Can we make it 8? Up 0.6% on the S&P 500. In foreign exchange, the dollar weaker against the bulk of G10, including the euro. Euro dollar approaching 118 at 117.92. And you'll see this from bonds to treasuries. Yields just a little bit higher, up 3 basis points to 0.6%. Risk appetite is good. Compare and contrast that to the economy, Tom. How many times have we looked at that situation where markets are looking okay and the economy is still looking shaky?
Absolutely, and we're seeing it in Great Britain today, and of course across America as well. September will be fascinating. Chicago is not interested in September. Right now, they're interested in August 11th. It has been a challenging summer for Chicago, and we are thrilled to bring you their economist. Diane Swank joins us from Grant Thornton, her work at Michigan, and then Diane Swank for years with Bank One as well. Diane, thank you so much for coming on today. It is shocking to have the family I have from Chicago, to have the grandfather that was in that room in the back of the Art Institute, that's trading room they've got stuck in the back corner, to see this Chicago in such disarray. Is it just about the slowing and collapsing economy?
Well, there's a lot of issues going on, and it's really devastating to see what's happening to Michigan Avenue. Clearly, people are out of work. They have a lot of time, and also the gangs are warring with each other. There's also the looting coming from the gangs because the drug business has dried up over the border, which is all bad on all sides. So, you know, this is very, very hard. It is to see this devastation to the city is very rough, but, you know, we hope we can make it through it, and this is getting harder and harder.
Diane, the polarization of this is seen in Washington, and a stimulus that is halted was the word I saw today in the national press. What would be your message as the lead economist of Chicago, with great respect to the Federal Reserve of Chicago? Diane, what would be your message to the politicians in Washington?
Well, I think it'd be the same as Charlie Evans, the lead of the Chicago Fed, and that is, this is now life and death. We are talking about a lapse in benefits that is already triggering food insecurity, homelessness, and it's not going to be repaired anytime soon. The governors, both Republican and Democrat, said they cannot do what the president has offered. They need to get back to the table and get a deal done. And every minute that goes by is compounding the losses. You can't, as a business, you can maybe get a loan to defer the fact that you don't have cash coming in the door for a little bit, although many businesses are shutting down. But for a family, especially for households in the Black and Hispanic community, this is just insult to injury. It's leaving people without money at a critical time and leaving them on the streets. We're talking about food insecurity and homelessness, the likes of which we've not seen since the Great Depression.
This, Dan, is the difference between the human approach to economics, which is the disparity beneath the aggregate figures, the headline numbers, and the people that make up those statistics, and a market that is just focused on the top line, progressive, positive improvement over the last several months. Do you think we can maintain the latter given what's happening with the former?
Well, you know, the dissonance is really getting to be deafening between the financial markets, Wall Street and Main Street. And I think one of the things the financial markets aren't taking into account is the compounding effect that this is having. We're talking about an economy where you're shuttering a lot of businesses. At least 500,000 businesses have shut down permanently at this point in time in the U.S. That taking away of dynamism, consolidation in a few small businesses not only undermines the innovation of the U.S. economy, entrepreneurship, but the job-generating ability on the other side. And it's really notable that we've had trouble getting out of even the most mild recession since the 1990s with job generation. Remember, the 1990-91 recovery was called the jobless recovery. Coming out of the Great Recession, a lot of people thought we'd get a big bounce. Instead, we didn't, because we did not do transfers to state and local governments. We've not learned our lessons, and Washington needs to get back to the table if they want to get out of what is now metastasizing into a much more vicious cycle, not just temporary COVID-related losses.
Well, Dan, the administration believes that we can have a V-shaped recovery. I understand that concept is just a channel changer for many people now. They hear it, they turn over. And I'm wondering from your perspective whether we're closer to a W given the direction of travel at the moment.
We're closer to a double dip, which would be a W, although, you know, we're talking about one quarter of positives. If we just hold at the June levels on retail sales and consumer spending, then we'll have a very strong third quarter. That's kind of a false narrative because that's really plateauing and not showing any momentum over the summer. We could actually lose some momentum in August and September given the lapse in $18 billion a week that consumers were getting in terms of enhanced unemployment benefits to support spending in the U.S. economy. So as we go into the fourth quarter, when you've got...
Okay, ladies and gentlemen, it's time to place stop on profit for Japanese yen, and it is 106.071. All right, so stop on profit for Japanese yen, 106.071. It will give us £200 in profit. Okay.
Economy can reopen, manage the virus, get the economy going. The health of our individual people, our population, really is the driver of the health of the economy.
Diane, there's been a shift in narrative, and you're really speaking to this from this recession can be really short, very deep but short, and we can pull out the other side to this is a typical recession. It's going to be very difficult to get back to a normal or pre-COVID level of unemployment. Right now, Mark Zandi of Moody's saying that the unemployment rate in the U.S. probably closer to 14%. Do you agree, and how long will it take to get back to more normalized levels?
Well, that's a great question, and we've been doing a lot of simulations on this. It's really hard because it's, one, dependent on whether or not Congress will just backfill the hole that we're creating by COVID-related losses, which we need at least $1.5 trillion just now. That's without stimulus on the other side of this. If we get $1.5 trillion with the delays that we've seen, we won't get back out of this on a level of economic activity until mid-2022, the second quarter of 2022. That's a long time, and it's not the snapback that many had hoped for, and that's with some catch-up in 2021 as we try to get back online. But we're really undermining our ability, our potential to grow on the other side of this. As I've often said, this is like, you know, COVID is the iceberg. For us not to be the Titanic, we need lifeboats with supplies in the water this time around to traverse these much deeper COVID-tainted waters than anyone expected for longer because we did not manage the virus itself.
Yeah, there's an increasingly painful story for people who don't have their jobs, and there's increasing fear among people who do that they'll see their wages cut or their jobs cut. And I'm wondering, Diane, in the United Kingdom, we saw data this morning that showed wage deflation for the first time since records began since 2001. Are we going to see wage deflation in the United States in a meaningful way?
That's a great question. I mean, some of that's because of the people who are employed are actually not employed and being paid part of their income. So that's why we're seeing it. So it's a bit of a statistical residual of the unemployment that's actually in the UK. But I think it's very important to understand that we saw wage cuts at the onset of this crisis. Never see that before. Nominal wage cuts because people thought it was temporary. And what firms did is they cut white-collar wages in order to preserve their jobs, to not lose their people after coming off 3.5% unemployment. What's becoming more clear now is that we'll likely see a repeat of wage cuts and unpaid leaves, which is a wage cut as well. As we go into the fall, we've already seen several firms start to call for that, and that could further suppress wages in a way that we don't usually see in a recession. That whole sticky wage theory gets thrown out in a COVID recession. Yeah. And this is becoming metastasizing. I also think it's important to note that white collar and high wage losses, we always focus on the low wage losses because this is largely low wage, but the high wage percentage losses in employment are now approaching those of the Great Recession.
I mean, Diane, this is just extremely important. As you mentioned, the labor tumult in the country. Every kid in America at gunpoint has to read Upton Sinclair, The Jungle, and you read about the Chicago labor economy of 158 years ago. Are we going back to the jungle, this atomization of our labor economy where we have the haves and a massive have-nots in America that on a real basis can't keep up?
Well, unfortunately, we're already there at 3.5% unemployment. What COVID revealed was the inequalities that existed in the U.S. economy in an extraordinary way, and then exacerbated those inequalities. And the idea that we've got, families that can't feed their children for a week right now in the United States of America because of a health crisis. This is now metastasizing into a humanitarian crisis and taking on a different kind of nature of a self-feeding negative cycle that we don't have to do. The reason it's worthwhile to go through these scenarios, the downside scenarios, is you can see how you could stop it from happening. There are still ways we could mitigate the spread of COVID, especially as we open up colleges and older students are highly contagious. We have to mitigate that going into the fall so that we don't have to keep as much of our economy closed down. We need a nationwide testing effort. We need that testing funding that would be in a national, the trillion plus plan by Congress. Both sides agree on that. I don't understand why we can't move forward on testing when we're still chasing a moving target in that. So there are ways that we could escape this becoming worse situation, but we need to act today. Really, yesterday, the clock has already run out for too many people. We need to get those lifeboats out there to help the economy. But I think it's really important to note that this is not where we want to go, and we have a choice.
Diane, we're really lucky to have you on the show with us this morning. Thank you. Diane Swan, Grant Thornton, Chief Economist. Lucky to have Lisa back with us as well, Tom. Lisa mentioned the jobs report out of the UK. That 3.9% unemployment statistic is the most artificial number probably in the history of the labour market.
Why is that?
Because what we have in the UK is a furlough programme which has accounted for almost 9 million people, whereby the government has paid up to 80% of their wages, capped at about £2,500 every month. It expires in October. If you are on that programme, you are classified as employed. You won't show up in that statistic. What the UK faces at the back end of this year could be real trouble. If that programme expires, and the Chancellor has basically suggested it will, that is when we start to see those numbers move more aggressively in a way we don't want them to, Tom. And what it emphasises, underlines and highlights is how important the fiscal response has been throughout all of this to support the labour market and support consumption.
I think I've said this 3 times this week. Let's say it again. John, I've never seen where and I don't consider Diane Swank to be political, but John, I've never seen so-called conservative economists so on the same page with so-called liberal economists over the need for stimulus soonest.
Makes it all the more remarkable that we can't strike a deal, Tom, down on Capitol Hill. From New York City this morning, good morning. Up next, Dan Tannenbaum, Oliver Wyman, partner, on what is happening with sanctions. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Joe Biden could name his running mate as early as midweek. Bloomberg's learned the Democratic presidential nominee has finished interviewing all the top candidates. Biden promised in the spring that he would pick a woman to be his vice presidential candidate. Vladimir Putin is claiming victory in the race to develop a coronavirus vaccine. The Russian leader says the country has come out with a vaccine that offers a lasting immunity. Putin says one of his daughters has been inoculated. However, the Russian vaccine was registered before phase 3 trials. Those trials normally last for months and involve thousands of people. President Trump told Americans their retirement accounts are, quote, doing fantastically. New data shows he's mostly right. According to Fidelity Investments, the average 401k balance increased 14% in the second quarter. The average balance is a little more than $104,000. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
You see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
Chinese don't need is anything really destabilizing between now and January, when they may be dealing with a new president of the United States and have an opportunity to reset these relations.
John Lieber of Eurasia Group there, commenting on the situation between the United States and China, and reading between the lines there, Tom. Was that a John Lieber of Eurasia Group saying, wait to see if President Trump has to leave the White House and former VP Joe Biden walks in?
Well, you'll have to see. I don't know where this is going, John, but right now we've got huge news flow out of China, huge news flow as well out of Europe. You wonder where the sanction debate in Europe is going. We haven't even touched on that this week. Within the Biden-Trump debate, there's the game theory, the game of chicken of what next, and it wraps around sanctions. Daniel Tannenbaum is arguably the best guy in the country on sanctions. He's now at Oliver Wyman, partner and America's anti-financial crime head. Dan, you know the minutia of this up, down, and sideways. When you see that Senator Rubio, Senator Cruz have sanctions, translate what that actually means.
So thanks, Tom. I think it's important to note that Senator Cruz and Senator Rubio have had sanctions levied on them twice in the last month. Yesterday, as a result of their involvement in the Hong Kong debate, but also from the response to last month's sanctions of certain people in Xinjiang province on the alleged Uyghur treatment, they were sanctioned for interfering in China's internal affairs. So I view the steps of sanctioning Marco Rubio and Ted Cruz as a de-escalation sign, because they've already sanctioned them. The sanctions don't actually have a meaning or any sort of definition in China at the moment.
Dan, how close are we to a company, a multinational, needing to choose between maintaining a presence in China or maintaining a presence in the United States?
I think Hong Kong is where you're seeing that line drawn. And for right now, if you look at financial institutions, global banks that operate in Hong Kong, that operate in the U.S., especially with the sanctions levied against Carrie Lam and others in the Hong Kong government on Friday by the U.S., banks have already begun rejecting transactions related to those 11 designated persons. So for the moment, banks are choosing the U.S. over China until China gives them reason not to. And that flies in the face, actually, of the Hong Kong Monetary Authority saying that those sanctions have no legal right to be enforced in Hong Kong. You're seeing global banks ignore that and still follow the U.S.
Well, Dan, what this underlines, right, is the power of the U.S. dollar. And that's the power the United States has right now. Does a financial institution have any choice but to listen to what this administration in the United States has got to say over and above what the Chinese Communist Party would ultimately like?
You know, I think banks are still going to follow the U.S. until China gives them reason not to. There's an argument that could be made that compliance with the U.S. sanctions on Hong Kong, in Hong Kong, would be a violation of the newly passed national security law. So again, the U.S. is the de facto standard that global banks will follow until they have reason not to. And this is very much in line with how the U.S. and EU have faced off with respect to Iran treatment. There's been EU anti-boycott restrictions for years, but they've never been enforced, so banks have followed the U.S.
Well, you've got the sanctions, and then on the other hand, you have the potential ban on U.S. businesses doing business with TikTok and WeChat of Tencent. And I wonder what the bleed-through effect is going to be on U.S. banks, on Wall Street in particular, given the fact that U.S. banks use WeChat in China doing business. They've been expanding in China. This affects the way that they try to have an international presence. How much pushback are you hearing from Wall Street, from some of your clients, to some of these proposals?
Yeah, I think there's a lot of hope that some degree of a deal is reached after the president's executive orders late Thursday night. I think that there's two bigger issues that come off the back of the focus on the social media and messaging apps. You know, one, why would foreign businesses want to come and set up their technology companies in the U.S. for fear of potential socialization of what could happen to their businesses and forced divestitures? It also poses a risk to U.S. companies operating in China where the reverse could happen to them. But I do think the market is hopeful that some degree of a détente is reached and these apps will be able to continue to function just as they have been.
Dan, what would be your advice to the president? I mean, it's a game theory. As I said earlier, it is a massive tit-for-tat game of chicken as well. You've been doing this for years. You did it at Treasury. You've been cited by the FBI for your work. What's your advice to the president to break the game of chicken?
I mean, to be flip, it's can we all just get along? But I mean, how can we find a productive way to negotiate with China? There's no disputing that some of the actions that the Trump administration have taken on China were long overdue. It's just back to the how they're doing this. So I do think if you can go back to the manner with which similar discussions have been held, like the phase one trade deal negotiations, you'd probably have a much more productive outcome, especially since you're seeing China take somewhat more measured responses to some of the actions by the Trump administration.
From where you sit, is China delaying, waiting for a Biden presidency?
No, it's unclear what China is waiting for. I do think, there's a certain unpredictability in how this administration has handled China. And certainly in the last month alone, we've seen a fairly significant escalation of how the U.S. is approaching China. Whether they're waiting the U.S. out or trying to get them back to the table to have more practical and productive discussions is really unclear at this point.
Dan Tannenbaum, great to catch up with you, sir. Joining us from Oliver Wyman on the latest sanctions between the United States and China. The tit for tat continues. This Friday, Tom, virtually, the United States and China poring over progress of the phase one trade deal. Given what's happened over the last couple of months, can you believe that that is still intact? That still hasn't broken down?
Exactly. That it hasn't broken down is maybe more accurate. John, we had on the show yesterday or Friday, I can't remember, one of our esteemed guests saying it's over for Hong Kong. I'm mentally not there yet, but certainly that's the mood out there. And I just wonder how consultants like Dan Tannenbaum pick up the pieces for multinationals as they decide what to do forward, not only with Hong Kong, but what to do forward with China.
Whether they want to continue expanding into the mainland. And Lisa, so far, they do. That's been the story. Nothing to stop them right now.
I am very curious to see what comes out of these trade assessments, phase one trade assessments on Saturday. Really interesting to see how much the economic put really presides as the most important point here. In the past, it has been that the U.S. and China both are prioritizing their economies. President Trump's tactic hasn't seemed to indicate that he's taking a similar approach, John, and that's raising a lot of uncertainty about how this will turn out.
Can you define, Lisa, what progress is when they meet and talk through the weekend? What satisfactory progress actually is for a phase one agreement?
That means that you don't have an escalation coming out of that. I mean, honestly, it's if you have at least conciliatory rhetoric on both sides, that would be some sort of progress, I guess, in coming to some sort of agreement. But I don't know. I mean, President Trump saying that the situation has changed. China trying to take a conciliatory approach to wait it out for the next president.
The reason I ask this, Tom, is because it's pretty clear that the Chinese Communist Party has not reached those targets that they agreed to hit on agricultural purchases.
Yes.
So does the United States sit there and say, we're sticking with the deal, we like the deal, we like the progress?
The other matters are so more serious. I don't even think the trade negotiations are feasible right now. I mean, between Taiwan and Hong Kong, John, it's just been overcome by other events.
I would agree so far. This channel has remained totally insulated from the chaos going on around it. Coming up on this program, we'll catch up with Northwestern Mutual from New York City this morning. Good morning to you all. This is Bloomberg.
De esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien.
I'm placing a stop on profit. I'm moving further to 106.051. Stop on profit moved to 106.051.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Give you a sense of the real-time action, the 10-year yield tumbling.
Position closed on Japanese yen. Profit £200.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
I've never heard Fed officials basically beg for fiscal policy the way they are now.
Markets can probably continue to grind higher from here as long as we don't have a big negative surprise.
The question is, are we headed towards a cliff?
I think we are certainly in the midst of a slow-moving policy mistake.
Hong Kong is, for all intents and purposes, now part of mainland China.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Welcome to Bloomberg Surveillance. We welcome all of you across this nation on Bloomberg Radio, on Bloomberg Television, as well, international relations and politics. John, we haven't talked enough about the markets today, a risk on field. But what's so interesting, as Lisa mentioned earlier, John, the idea of finally a shift away from the factor of technology toward the factor of small cap, or the factor of something else besides Apple and Amazon.
For a whole 2 days as well, Tom. Will we see another head fake after this story stalled in early June? We've done it again and again, and we're doing it again in the last couple of days. 7 days of gains on the S&P, Tom, within 1% of all-time highs. And I wonder if that's one of the whys they can't get it together down in Washington, D.C., because this market is giving them very little pressure to get something bigger done.
Or certainly President Trump, of course, is hardwired to the market. We've seen that from long before his presidency. Lisa Abramowitz, you mentioned this earlier, the idea of a high-yield bond under 3%. It's one of those indications of everything priced to perfection. Do you detect a bubble in bonds, or is it just simply a rational outcome from all the stimulus and Fed action?
Well, I'm not going to sit here and say that there's a bubble. I have other people who are going to come on and weigh in on that.
I was trying to get you in trouble.
Right now, I will say that there is a question: when does relative return stop mattering and absolute return start mattering more? At what point are people taking basically return-free risk going into high-yield bonds and earning 2.875% to buy bonds?
That, don't you?
I do love that.
When has Lisa resisted the opportunity to call something a bubble? Tom?
I did
what
not,
has happened?
but
You had
I
one
resisted.
day off.
I just resisted
one
it.
day off,
I
and
just
she
resisted
managed
it.
to resist.
It was incredible. That was a
It was
moment
a
of
sabbatical.
strength.
I've never seen it before.
It was a sabbatical. She took a sabbatical, no question about that. John, what's so important here within all this extraordinary news flow, and folks, thank you so much for your comments as you listen on radio and watch us on TV. John is just trying to frame the oneness of this tech juggernaut. We forget how historic it is as Apple approaches $2 trillion market cap.
Oh, absolutely. Apple is not Facebook, and Facebook is not Microsoft, and Microsoft isn't Apple, though there is some crossover between the likes of Amazon and Microsoft, Tom. I would just say that these companies, though, what they've done collectively in Q2 was just truly historic. To see them perform the way they did, I think has to be one of the most historic quarterly earnings seasons we've ever seen. To see an economy locked down the way it was, and they were churning out record quarters, Tom. Absolutely remarkable.
You have to deal with this, folks, at the retail level, the individual level, and also at the institutional level. The 10-year yield now back to 0.61%. That's a demonstrable move over the last 3-4 days. That real yield, don't forget the real yield. You'll see it on Bloomberg Television this weekend as well. The real yield is 9 basis points better than the worst. And, of course, gold crushed off that, down $50, 50, gold down $50, $19.90 the ounce. I bought in at $2,200. Thank you. Joining us now, Brent Schutte with Northwestern, where he's the chief investment strategist. He has to take a much broader, bigger picture. Brent, how's that bridge doing to 2022?
It's doing pretty well. I mean, you guys, I think, have hit all the high points, and certainly the Federal Reserve has had a huge impact on the markets, and they will continue to. And so I do think both policymakers have built a bridge from what was the economy before coronavirus to what hopefully will be the economy after coronavirus. And right now it appears that we're making some progress.
Does Wall Street need a fiscal package, Brent?
Yeah, and I think they'll get one. And so there's a lot of debate, a lot of negotiations, and I think you hit the nail on the head. Right now, the pressure is off a bit, but if the market were to begin falling, I do believe, given how important the market is to both policymakers, so you mentioned the president and how important the market is to him.
Yeah.
The market is also incredibly important to the Federal Reserve right now. Someone named Bill Dudley wrote an op-ed on your website a few weeks ago, maybe a month ago, talking about the goal of QE pushing asset prices up. And I just think in today's day and age, with where interest rates are at, the market is incredibly important to the economy, and the Federal Reserve knows that. They pivoted last year on a rate perspective, not because their forecast changed, but because the market told them they needed to. And so I think investors need to keep those things in the back of their minds as they, debate trading these up and downs and back and forths in negotiations. I think you'll eventually get a deal. It's just taking a little bit longer to get there.
So you're just saying stick with it, stay bullish, because if anything happens, they'll step in.
But right now, yes. I mean, what's on the other side of that? I think the Federal Reserve, they've shifted from what the Federal Reserve was that I knew when I first started in this industry 26 years ago to one now that does pay heed to the market. That didn't used to be their primary concern. They told me the economy was their primary concern. The Federal Reserve didn't used to believe they could help the differences between the haves and the have-nots. They thought that was policymakers or fiscal policymakers because monetary policy was a blunt instrument. Now they believe that they can help the difference by running the economy hot. And so until there's inflation, until there's rising rates on their side of it, I don't think there's much of a, at least in their mind, a perceived cost for doing this. Now, that'll change someday in the future, and we may have repercussions down the road. I don't think this is for free, but until then, I think the Federal Reserve stays behind the market, and it's a put, without a doubt.
All right, this put, Brent, I did show some restraint at the start of the show. I'm not going to show restraint right now. Is this a bubble if you have junk bonds being sold, 10-year junk bonds being sold at a yield of 2.875%? I get it. It's a can maker. People are drinking a lot more. But really, does this make sense to you?
You're not going to get me in trouble just like just like you're not trying to get in trouble yourself. Look, I think in today's day and age, it is what it is. We don't own any high-yield bonds right now in our portfolios, if that answers your question. I'm not suggesting it's a bubble, given where policymakers are at and the backstopping they're doing. But I don't think we'll wake up 5 years from now and that'll be the same situation as it is today. How about that for an answer?
Well, that was very diplomatic. Congratulations. When does relative return stop mattering and absolute return start mattering?
I think it's always been a relative return game. I mean, if you look back, and people tell me back in the 1980s the earnings yield was X%, whatever else it may be, but inflation was much higher then. And so to any retiree, Tom mentions a lot about financial planning and retail investors. I mean, everything's about real returns and putting your money where you think the best outcome is. And right now, with interest rates at 0.61% on the 10-year Treasury, I'm not suggesting there is no alternative, but the stock market still looks relatively cheap. And we focus so much on those big cap names. If I could have people look outside those names, there is value. That value just won't come to be recognized until the economy does recover much faster and we all start going out of our houses much more, which hopefully is not too far in the future.
Brent, to represent Northwestern Mutual and with the heritage of Northwestern Mutual, I got a really important question. What's Brent Schuette's actuarial assumption? How does this house of cards keep going with a sub 4% reality?
Yeah, I mean, I guess at some point, I mentioned in my opening comments that monetary policy I don't think is free forever. At some point, you will have some sort of return to normalcy. And I guess on the GDP perspective, we're an advanced economy. We're not going to grow as fast as we did once upon a day. That doesn't mean our stock market won't move higher. And so I think, the economy does matter to the markets, but certainly companies can create profits, and it's a global world now. Even with the recent pullback and all of what's happened over the past few years, American companies are still global, and there still are better growth rates to be had around the world.
Well, Brent, to build on Tom and Lisa's point, let's talk about income. Last week, 40% of high-yield deals priced less than 4%. Where are you getting income from right now?
That's the difficult part. I mean, where are you getting income? I mean, our portfolios are overweight equity because we do think it's a better relative value, back to Lisa's comment, than bonds. And certainly a total return is much more of something that people have to look at in today's day and age. That's just the reality of what it is, and that's the reality of what the central bankers have made happen. I guess the opposite side of the equation is inflation's low. So the price of things that you buy aren't going up as much. And that goes back to my comments about real returns, not absolute returns, being more important to any investor and any retiree for that matter.
Hey, Brent, great to catch up. Appreciate your time this morning. Brent Schuette there of Northwestern Mutual. Lisa lasted a whole 5 minutes, Tom, before she called something a bubble. To get to high yield, though, spreads are 483. Spreads are 483, and pretty much everyone I've spoken to, Bob Michael, JP Morgan, Mike Collins over at PGIM, and others too, expecting to see 400 long before we see 6.
Yeah, John, I don't know the dynamics of the high-yield market like the two of you do. You were the star of the real yield, and Lisa knowing bonds cold. But, John, I look at the dysfunction of this market, and what I would have to say is we all need to be beyond vigilant day to day. And I go back to our opening idea, John. Have we finally seen a shift in equities towards everything else but tech?
Tom,
I don't have an opinion on that. I'm just asking.
Well, let's ask a different question. Let's ask a better question. What would it take to see a sustainable shift away from growth,
GDP,
away from big tech?
GDP.
Exactly.
GDP.
Real growth.
Real growth. It ain't there. And, you were talking about England. Maybe it was Guy Johnson. I can't remember. But you just wonder where real GDP is going to be in the United Kingdom and the U.S. here, Q4 and into Q1.
I love that you're confusing me and Guy this morning.
Hold on a second. Seriously, Tom? Basically, any guy with a British accent is the same
Maybe
to you?
Maybe it was me.
Yeah,
Maybe it was Guy. He can't see us. What difference does it make? Whatever.
Well, Manus, Guy, whatever.
Well, Manus has got a different accent, Tom. We'll talk about that another time.
Oh, that's one of those RP accents. Right. Manus is RP.
That is a different accent. That comes from Ireland. That's an Irish accent.
Oh, dear Lord.
We can talk about this another time.
I didn't know that. Okay.
Well, consider yourself informed now. I've lost my train of thought. Lisa, let's talk about the market very quickly in high yield. Spreads aren't as tight as they were at the start of the year. At the start of the year, we didn't have a Federal Reserve that was in this credit market buying, or at least sitting on the bid in the way that it has announced in the last several months. That's the difference here. And I think the struggle for a lot of people is to understand, okay, I'm assuming this risk. What is the adequate compensation for that risk in a world with a price-insensitive buyer in the mix in a bigger way?
Yeah, and frankly, it's a big question mark, especially at a time when bankruptcies are coming at the fastest rate in history, John.
Bankruptcies up, supply up, spreads tighter.
Go figure.
Can you make sense of that, Tom?
No, I can. And, the bankruptcy part is really important in this isolation, particularly statistically in the United Kingdom, of self-employed people. John, I would go back to Diane Swank and just the sheer hardship that is out there for X% of Americans right now. And as we've talked, I mean, there's just nothing going on in Washington. I'm frankly not looking to the end of August. I'm trying to get to the third week of August.
We'll talk about D.C., and we'll try and get to next week with Henrietta Trays of Vader Partners. We'll do that next from New York City. City this morning. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. President Trump says he's seriously considering a capital gains tax cut. He told reporters it would create a lot more jobs. The president can't cut taxes on his own, but some advisors say he could issue an executive order that adjusts the original purchase price of an asset when it's sold, so no tax is paid on appreciation for inflation. The Trump administration reportedly may temporarily prevent citizens from returning to the U.S. if there's a chance they have the coronavirus. According to the New York Times, the ban would apply to permanent residents too. Federal agencies have been asked for feedback on that proposal. In Seattle, the police chief has resigned after the city council voted to eliminate 100 officers and cut the department's budget. It's the latest move by a local government to cut police funding in the wake of protests over police killings of black people. Seattle's mayor warns the cuts would jeopardize public safety. And in the UK, employment in the second quarter fell by the most since the financial crisis. The number of Britons without job or with jobs declined by 220,000. That was the period when the coronavirus lockdown restrictions were most severe. It likely matters could get worse. The British government will start gradually withdrawing its support for wages starting this month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing, and it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
With which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it. That makes me confident that we are going to do everything we can to determine safety.
We know it's a pandemic, and we want to be very responsible for pricing. We plan to underprice this vaccine for its value, especially in the pandemic phase.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The state does not have an identified resource of $700 million per week that we haven't already obliged. There is no money sitting in the piggy bank of the previous CARES Act to be reprioritized or reconstituted for this purpose. Simply does not exist.
Governor Gavin Newsom there of California pushing back. He wasn't the only one. We heard it from Murphy of New Jersey, and we heard it from Cuomo here in New York, saying the following, Tom: we started with a 30 billion hole, and your solution is to cost me another 4. Thank you. That is handing the drowning man an anchor. The governor's pushing back against the president's executive order over the weekend.
Well, it's been a group effort in pushing back. I really haven't seen a clear article, John Farrell, on any of this that talks about the doability of those executive orders. Have you seen anything, John, that gives optimism they can be
It's going to be really difficult. I think the president mentioned yesterday, Tom, that even if the states couldn't chip in the 100, they could still go forward with the federal piece of the extra 3. But the analysis that I've already seen, with the numbers where they are in the labor market, let's just assume they stay where they are. That 300 a week of additional unemployment benefits, because of the money and where it's been drawn from, the disaster relief funds, it's capped at about 40-something billion, could run out in a couple of months.
Yeah,
we'll be here again, Tom, in a couple of months' time.
Yeah, well, I'm not going to go there right now. The president, John, this is out on Fox Sports. He's talking up the Colorado Rockies. He also says he hasn't spoken to Xi in a long time. I guess that's breaking news on a somewhat slow Tuesday here. What Henrietta Trace knows at Veda Partners, their director of economic policy, is that Mr. Meadows hasn't talked to Ms. Pelosi in a very long time. So we'll go to her right now on the silence in Washington. Henrietta, with all your Washington experience, how do you break silence?
You break silence with time and external pressure. So I would love to see, unemployment data reports come out every single day. I'd like to see a GDP report every single day. That kind of macro push really helps move the needle. I think, unfortunately, we have seen a lot of action behind the scenes in D.C., and it's come from Republican campaign donors and major base advocates like the Club for Growth or the Heritage Foundation, and they've encouraged the Republicans to oppose reaching a big deal with Speaker Pelosi and Minority Leader Chuck Schumer. And so the action you're referring to has already taken place, and it's resulted in, ironically enough, no action. And that is the preferred outcome for the Republican conference. That's where we are today. There is a sense of ebullience on the Republican side that I haven't seen in many months. Just talking with folks that I'm close with in the Senate or the House or the administration over the last maybe 4 days, this is the happiest I've seen them in several months, because they were able to buck and punt on a $2 trillion package that none of their base donors really wanted to see. So to talk about breaking the logjam now is actually to miss that right now Republicans view this state of affairs as having won. So it's going to take quite a bit, and I think it's going to be at least 3 weeks into September before we get meaningful negotiations going on.
3 weeks into September, Henrietta.
Yeah, well, let's just walk through it. I mean, this week is nothing. Everybody's gone. Everybody's in the DNC next week, the RNC the week after. Then it's Labor Day. So you're already at September 8th. It's going to take them at least 2 weeks to have a conversation that yields a $1 trillion package, let alone a $2 trillion package. And you're looking at expired unemployment insurance benefits, even if states go through the $44 billion in FEMA funds that you just referenced. So we're going to be right back at this table in mid to late September, any way you cut it.
Do you think there's a chance we just don't get a deal?
I think the chance has grown. My odds of a deal being reached dropped from 85% to 75%. I am already hearing some tidbits of what negotiations might ultimately look like here. For instance, the payroll tax piece that is so unworkable for employers and requires that they withhold or not withhold any of the payroll tax. That is super complicated just because eventually people are going to have to pay that back. The president doesn't have the authority to change tax codes. So what they're already considering is providing some sort of a stimulus check in September that eliminates the payroll tax suspension that the president just put out in his executive action over the weekend. So they're already trying to find workarounds to the stuff that the president rolled out on Saturday, and that does point to a deal. And so I'm optimistic that we will get one. Again, 75% odds, but that is down versus 85%, which was, as close to certainty as you can be in D.C., that we would have gotten a package in the last few weeks. Obviously, the actions of the political calculations, the elections, and the Republican base really drove a lack of progress on a deal. And again, that's considered right now a win for the Republican conference, in particular the White House.
What kind of concessions are the Republicans willing to make on state and municipal funding?
Not the ones that Democrats have asked for specifically, and I've spoken with Democratic leadership on Sunday. They are going to be looking for election security and post office security and more funding for hours and a rollback of the regulatory reforms that have been recently instituted there. That's their primary focus on the state side, and I have not seen any give from Republicans there. So I know that's going to be a major sticking point.
Henrietta, that goes right to where I wanted to go. Give by Republicans, or for that matter, give by Democrats. We at Bloomberg struggle each day to try to be impartial. Let's look at the Republicans. Are the Senate majority Republicans on the same page as the House minority Republicans?
That's an interesting question. I don't know that it much matters, just because the Senate majority is the majority party and the Republicans in the House can get rolled. They're not going to need to provide many votes for this anyway. I would anticipate somewhere in the 20 to 30, 40, if we're lucky, Republicans in the House are going to ultimately vote for this package. And I think the sticking point we saw for Majority Leader McConnell is that he's having a really tough time corralling his conference. But I am reminded of something that I've heard from Majority Leader McConnell's office for years now, which is that winning has a tendency to really pull the caucus together. So now that they have won on this, bucking Pelosi event, I think it should create some goodwill and actually help Majority Leader McConnell try to find some middle ground for a package in September. So that sort of idea that winning begets winning will help smooth over some tensions, could go a long way to helping Kevin McCarthy, the minority leader in the House, who has already come under some sort of political challenges as a result of potentially reaching another CARES Act 2.0 deal with Speaker Pelosi. So I think this idea that winning begets winning is something that we should be monitoring. It may make it easier for Majority Leader McConnell to pull aside his votes from the House Republican Conference and also the Senate Republican Conference to make them feel as though they're in the majority again. And that's also a refrain I heard a lot from Republican Senate staff this weekend. Look, we're in the majority. We have the White House. We have the Senate Republicans in the majority. We're going to be the ones that run this show. So we want unemployment at 300, 400 max. We don't want these massive aid to state packages going out. You cannot have any policy riders in here. You really got to recognize that you're in the minority. And of course, Speaker Pelosi knows that in D.C., being in the minority is actually a much more powerful position. So it's this dichotomy that we are now obviously going to have to wait another 5 or 6 weeks to get through. But it is good news for the Republican conference that they see this as a win because it may make Majority Leader McConnell's job easier down the road.
Henrietta, don't be a stranger. Come back soon. It's great to catch up with you. Henrietta Trace there of Vader Partners, the Director of Economic Policy Research. I don't think this market is in the third week of September. The conversation will continue right here on Bloomberg.
all the lodge facilities and on all tourist facilities within the Mara, both in and out, they've all closed down. And we get much of our revenue from the park entry fees and other sources like the balloon safaris, balloon tariffs, even from the lodge rents, and all that has gone down. The surrounding community, when they are desperate, then they can do anything to hunt. And we have been getting such kind of cases of bushmeat, especially bushmeat trade. And we have arrested quite a number. So far, we cannot say for commercial poaching, no, it's only for bushmeat trade. And they kill just because they are desperate to get meat.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Equity market doing nicely this morning. Good morning. This Tuesday morning, alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Here's your price action. Risk appetite building worldwide in the equity market, particularly in Europe. Here's stateside up 19 points on the S&P 500. We advanced 0.6% on equity futures. In foreign exchange, just short of 118 on euro dollar at 117.92, up by 0.5% on that currency pair. And in the treasury market, 0.62%. Another lift to treasury yields, up 4 basis points now on the day.
Right.
Lisa pointing out the 3-year auction. It comes later. Tom, tomorrow, 10-year notes. And then after that on Thursday, we get the 30-year bonds.
Well, maybe some of the thrust there, but hugely correlated. I love that we go to 4 digits there on our screen on the yields. Right now, that's what Global Wall Street is looking at. John, we're about ready to go to a 0.99 on that TIPS yield, a negative 0.99. That's 10 full basis points away from the worst of a couple days ago. And John, gold down $55 moments ago. These are some profound moves. With us right now, Stephen Gallo with BMO Capital Markets. He writes really intense, short research notes that sentence to sentence are incredibly informative. And Stephen Gallo, you hit me over the head with your so-called dollar devaluation. Did the dollar really move all that much?
Well, I think, yeah, it did. And probably what's even more astounding is the abundance of dollars just out there in the system. So you look at declining usage of the Fed swap lines by EM central banks. That points to an abundance of dollar liquidity. The Treasury's cash balance with the Fed, it's starting to bleed a little bit lower now, but it has swelled. And then, of course, being an election year in the U.S., the fiscal story for the time being is a lot less dynamic. And so there's been an adjustment in relative prices in FX, but it has been primarily a dollar move.
If it is a dollar depreciation, what's different about it this time? Is it simply about the fiscal buildup?
Well, I think it's just the amount that the Fed has thrown at it. You can look at the pace of expansion of the Fed's balance sheet compared to the ECB's, the BOJ's. It's been greater. But there is a dilemma, I think, Tom. There's a dilemma at the heart of this, and it stems from the fact that I think few investors viscerally feel, really in their gut, that the rest of the world is fundamentally much better off than the U.S. As I said, it's an election year right now. There could be a dramatic shift in economic policy after November. that's a risk. We simply don't know. But looking at this purely from a structural angle, many investors will be second guessing to a degree the bearish dollar narrative.
Do you think, Stephen, we're already pushing those limits right now?
Well, I mean, look, the euro is the biggest, most liquid alternative to the dollar, right? So, but there's a dilemma there as well. The problem is that the euro's external position is sturdy, but its internal growth dynamic is hollow. So it's mainly a question of how much real appreciation of the currency the bloc can withstand. As I've said before, an alternative to the dollar, of which the euro is one, is not the same thing as a replacement for the dollar. But, I mean, for the time being, if you go by how some people have been pitching the EU's recovery fund, Eurodollar should be trading at 130 by now. So, well, cool, bring it on if that's the case. But you see, that's where the logic starts to break down again, because if you dig through the details, what the EU's framework is doing is further concentrating and centralizing decision making. And the further away from localism you get, the less likely you'll be able to get the velocity of money rising sharply again. And in order to serve the real economy, banks need everywhere, but most importantly in the Eurozone, they need a yield curve and they need an incentive to lend for real GDP transactions. They have to be connected with small businesses. So until you see that dynamic change, I would call the Euro-dollar rally 8 parts dollar weakness and 2 parts euro strength. Maybe even is a bit more finely balanced than that.
8 parts dollar weakness, Stephen. When you talk about moving money around, it might be another way of expressing inflation. And we just got the producer price index data, which came in much higher than expected at 0.6%. That's the headline final demand for the month of July versus the expectation for 0.3%. And you're seeing a move really in the long end with rates higher, prices lower. How much does the weaker dollar accelerate if we do see some uptick in inflation based on some of these metrics the Fed uses?
I don't think it's a really important dynamic for the FX market right now, or even to a large extent the rates market. I think we need to get through the next 3 to 6 months, and we need to see how dramatic of an effect, if any, there is on price developments across the globe, from the China decoupling story, the breakdown of supply chains, the shift in trade flows, what that's going to mean for wholesale prices, and ultimately does any of that, if it occurs, get passed on down to consumers and households in the CPI. But aside from that, and I've heard it on your show earlier today when you've had other, highly qualified guests speaking, they keep talking about the same thing. They're talking about the incentives that the central banks, in particular the Fed, are giving investors to move out the risk spectrum, if you will. So looking for higher relative returns by owning riskier assets. That is not a driver of real GDP growth ultimately, and it's not a driver of goods price inflation. And the more strain you have on banking systems in question, whether it's Asian economies or the Eurozone with its various weaknesses in its banking system, the more strain there is on the financial system, the further and further away you get from bank lending to grow real GDP. And that is a problem. That was a problem when the global financial crisis struck a decade or so ago, or just over a decade ago, and it's still a problem today. We still haven't broken that feedback loop.
Hey, Stephen, let's just get to the bond market quickly. 10s and 30s lower, yields higher, up 5 basis points across the long end of the curve right now. Your 30-year, 1.3%. Your 10-year, 0.62, pushing 0.63. This time last week, Tom Keene, a close just north of 50 basis points on a 10-year, which was a record low close for the Treasury yield here in the United States. And now we're 12 basis points north of that, off the back of this PPI number, which Lisa mentioned. So yields up, dollar weaker off the back of this. Euro dollar pushing 118.
John, these are jump conditions. I'm glad you mentioned it. The PPI, folks, is divided into 3 segments. And what's critical here is all 3 segments moved on PPI. And this, of course, folds into the business system. 20 and 30 years ago, folks, PPI was actually as or even more important than what we got out of the consumer price index. And, John, you mentioned the jump condition of 10-year yield to 0.62% with attendance steepening. And we're seeing it correlated I mean, the equity market was so far ahead this morning, the others now have really caught up with us. Stephen Gallo, do you at BMO Capital Markets, do you see an embedded inflation already in a system, even with the gloom labor statistics that we have?
No, right now I don't think, and it also reflects the writings of it's reflected in the writings of our rate strategists. No, I don't think right now the Treasury market is so much pricing in a return of inflation as much as it is pricing in the uncertainty over the impact of COVID on the retail sector, on household spending decisions, on business investment decisions, and also to a degree the fact that the lower rates dynamic, which of course is largely instigated by the Fed responding to the potential for disinflationary shocks or the disinflationary shock we had earlier in the year, the yield curve is reflecting the fact that the central banks continue to give market participants the incentive to move out the risk spectrum, to buy riskier assets.
Right, John.
That's the dynamic.
Gold down $64. You really wonder, John, with all that one-way bet on gold, if we'll be down $100 before this is over.
We talked about better data, Tom. That better data would be the poison for some of these consensus trades, that they would start to roll over if you got the better economic data. But, Stephen, something that you've talked about in the last 5 minutes I think is really important. For these moves to be sustainable, to be durable, you have to believe the data is going to pick up over time, that the improvement will continue, that we will have this reflationary impulse that won't last a couple of days. It will last a couple of years. Do you expect it will, Stephen?
I think right now you have to look at the gold price as an opportunity to step in again and buy the dips because of the whole fiat currency devaluation story. It's not just a dollar story. It's all fiat currencies which are effectively under pressure. There has been, and there probably will be again, a scramble for alternatives to fiat currencies. And right now there really isn't, and many other viable trades other than equities and maybe some opportunities in high yield. I think one big difference, if I can just get this in quickly, between this cycle, this reflation cycle, and the reflation cycle we saw took hold after the global financial crisis is EM. EM is in a much different position today because of the shift in global trade, because of the geopolitical factor, because of the China decoupling story, and because EM central banks are for the first time engaging in various forms of MNT and financial repression. That really raises the medium-term risks for those economies. If something shifts dramatically, or if they continue to clamp down on financial openness as a result of these policies.
Stephen Gallo, great to catch up with you, sir.
Stephen,
BMO
thank you.
Capital Markets, off the back of this market move. The cyclical move, let's run through it very quickly. In the equity market, equity futures on the S&P up by 20 points, positive 0.6%. Your underperformance from the NASDAQ, big tech. Once again, will we see that for a third straight session? In the bond market, Treasuries really in the driving seat. Yields up by 4, now 5 basis points to 0.62%. This time last week, a record low close on a 10-year yield just north of 50 basis points. Tom Keene, what do you see? You've seen the outperformance in Europe. You've seen that rotation in G10 as well. You've seen that dollar weaker. That started to come through this market as well. And the long end sell-off yields higher.
I haven't done a standard deviation study, but we were so far down and so depressed on disinflation fears and the correlations that are out there, John, that I really can't say we've seen a snapback, but maybe it's one hell of a reversion to the mean here, all in 20 minutes off PPI. And of course, John, it sets you up for CPI tomorrow. You wonder how that will come in.
And retail sales on Friday. And I love the way you say that sets me up, because Tom Keene is taking some time off. Tom Keene won't be with us through Friday. He'll be back next Monday.
It's remarkable. They're forcing me to take time off.
Counting how much vacation you've been taking this year.
They're forced. I'm almost out of my vacation days.
Good for
I
you.
got to start using yours.
You can. I've got too many because you won't let me take time off. We'll talk about that another time. Coming up on this program, Sarah Bianchi of Evercore ISI. She'll be joining us a little bit later on Bloomberg
it's a
TV.
TOTS reunion. That's what I'm
Looking forward to that. Reunion. You've got a TOTS reunion. Is it virtual?
Yes.
A virtual one. Okay.
TOTS.
This is Bloomberg.
With the First Word News, I'm Ritika Gupta. There's a roadblock in the Capitol Hill talks for a new virus stimulus package. It's Senate Majority Leader Mitch McConnell's insistence that there be legal liability protections for businesses, schools, and colleges. McConnell says He won't let a bill pass the Republican-controlled Senate without a temporary shield. Democrats say they won't accept the Republican plan as it stands. Joe Biden could name his running mate as early as midweek. Bloomberg's learned the Democratic presidential nominee has finished interviewing all the top candidates. Biden promised in the spring that he would pick a woman to be his vice presidential candidate. Vladimir Putin is claiming victory in the race to develop a coronavirus vaccine. The Russia leader says the country has come out with a vaccine that offers a lasting immunity. Putin says one of his daughters has been inoculated. However, the Russian vaccine was registered before phase 3 trials. Those trials normally last for months and involve thousands of people. For the first time in more than 100 days, New Zealand has reported its first local cases of the coronavirus. That prompted authorities to put the country's largest city, Auckland, on lockdown to prevent another outbreak. Prime Minister Jacinda Ardern says New Zealand has beaten the virus before and can do so again. Another escalation of trade tensions between the US and China. The Trump administration will order imports from Hong Kong to be labeled Made in China. The actual economic impact may not be large. Most of Hong Kong's shipments to the US are re-exports from other places. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
coronavirus has elicited is effectively the problems of governance, which is how does government deal with crises and how bad it is in some of these emerging markets.
Terry Wiseman there from Macquarie, the Director of Global Currencies and Interest Rate Strategy, joining us in the last 24 hours. Coming up on Bloomberg TV in about an hour from now, Mark Kiesel, PIMCO's Global Credit CIO. And just for Lisa, we're doing this just for Lisa, the high-yield can maker that can borrow over 10 years for less than 3%, Tom Keene. Looking forward to that conversation in about an hour's time.
Well, hugely timely conversation, particularly, folks, with what we see in the market today. Let me revisit the Dow right now, up 360 points and advancing 28,039 on the Dow. It leads the way. SPX up 17 points, 3370 on Standard & Poor's 500 with a VIX in almost a stick, 21.25. Critically, the NASDAQ does not participate. NASDAQ 100 is red. Right now, Barry Ritholtz joins us, always writing for Bloomberg Opinion, eagerly awaiting a new book out before 2025. We're thrilled Barry could join us this morning. Barry, we're back to Dow 28,000. I get the sense the American public is shell-shocked in investment. What do you do when you're shell-shocked, whether it's November of 1987, September of 1998, or where we are right now?
Well, first, you have a plan and you stick to the plan. This is not the sort of hobby that you can improv. Leave that to the stand-up comedians to try and figure out to make changes on the fly in the midst of what is really a very confusing and emotional period. It's a recipe for disaster. So have a plan and have the discipline to stay with the plan.
I want to talk, Barry, about the biggest mistake I see of the crew with a laptop on the couch right now, which is they are completely delusional about the percent of trades that are successful, and of the percent of trades that are successful, the few that make you 80 or 90% of your alpha. That's Van Tharp, folks, from another time and place. Barry, nobody knows this, do they?
No, and the data is overwhelming.
Yes.
There's a teeny tiny percentage of stocks that drive returns. I don't mean this year or this cycle, but for the past century. You know, the vast majority of individual stocks go to zero, or at the very best have no return over decade-long periods of time. There are a handful of outsized winners that deliver all of the, forget alpha, all of the beta to market returns. And the odds of you being the lucky person who finds that one winner and can hold on to it, well, it's a lot more luck than skill, it seems, based on long-term active management returns.
And Barry, this is the argument for passive investing. And frankly, it's the fear that is in the hearts of a lot of individuals at big pension funds. And that raises an issue that has come to the fore with CalPERS, which is the $400 billion Californian pension that has seen incredible amounts of turmoil at the top. The latest, Ben Meng, their chief investment officer, leaving. How do some of these pensions face these returns expectations that are just anachronisms based on the yield that we get from treasuries or even junk bonds now? And how is that being sort of represented in the tensions that we're seeing there?
Well, remember, the move towards passive indexing is based on two elements. One, the long odds against finding the winning stocks by actively picking them. But the second, and perhaps more important issue, is the cost structure and the beauty of Vanguard and BlackRock. I can buy an S&P 500 index fund for 3 or 4 basis points as opposed to 150 or 200 basis points for an actively managed fund. So don't forget it's a two-sided approach. I know shops like CalPERS have been very aggressively trying to lower their cost structure. What was it? 3 years ago, they fired a lot of their hedge fund and alternative managers, not because the performance was so bad. It was okay, but the performance-based cost was so pricey, they would have been better off in index funds. So that's a convoluted way of coming around to it's more than just active versus passive. It's expensive active versus cheap passive. CalPERS may be a little different because I think that's that turmoil is based on some internal issues
we don't,
and isn't performance driven.
Yeah, and Barry, we're not going to get into that right now, but it is interesting for me to think about short-term money management for long-term asset bogeys of 7-8% that seem infeasible in today's era. Is that basically the message that you're sending, that relying on a 6-7% return is not really a likely outcome given where yields are, period, full stop, even if you go into private assets?
Well, it depends on your timeline. And look, probably the biggest bull in all of finance is Jeremy Siegel, the professor at Wharton, whose book, Stocks for the Long Run, I think it's in its like 4th or 5th printing. His previous expectations for forward returns for U.S. Equities was 7.2%. And the last time I had him on the show, he suggested people ratchet that back to 5 or 6%. Not this year, not next year, but for the next decade or two. He thinks that the bond bull market is essentially over. There's nowhere left for yields to go. And once bonds start to rise in price and see yields go higher, lower in price and see yields go higher, stocks become a little more challenging to see 7 or 8% returns.
Barry, real quickly here, I can see with my Ted Williams vision, those pink stickers on the back behind you, they all say, buy more Amazon, buy more Amazon, buy more Amazon. Are we finally seeing the top of tech stocks?
You know, I've watched people call the top in tech for, I don't know, 30 years, and they got it right once in March of 2000, but you know, the same people were screaming stocks were expensive for the previous 5 years. It's hard to take that seriously. Here's the thing that everybody forgets. Fair value is this little point in space that exists as stocks careen by it wildly, either on the way to becoming incredibly cheap or on the way up to becoming very expensive. Schiller Cape has been overvalued for something like 92% of the past 30 years. So valuation, I think people have a real misunderstanding. If you only want to buy cheap stocks, well, your window opens up once every 12 years.
That's about it. Maybe once every rules always broken, including by me. We have one rule here. We do a data check. We're going to do it right now. Futures up 17, which barely describes a Dow move. The Dow up 348 points. The VIX was in a stick earlier, 0.89 points to a more complacent market, 21.25. And the yield story is tangible with a 5 basis point leap on the 10-year yield. I want to make clear the 10-year yield is not out to what's called its envelope, 2 standard deviations. It's just a nice move back from the hugely depressed 10-year yield that we saw earlier, 0.6266 on the 10-year yield. The real yield is a better real yield, and with that, gold plunging a negative $70 on gold. Lisa, I did a good job. I bought that right at the top of the market. Thank you.
Oh, good. I'm glad.
1970.
That jewelry, worth it.
The checks in the mail, Tiffany's. Eric Cantor, 12 noon with David Weston. This is Bloomberg. Good morning.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City for our viewers worldwide, good morning, good morning. The countdown to the open starts right now. We're 30 minutes away from the opening bell with equity futures up 18 on the S&P 500. We begin with a big issue. Fiscal talks in Washington stalling as the equity market is heading back to all-time highs. There is very little pressure from Wall Street to break the deadlock on Capitol Hill, and it shows. Republicans and Democrats exchanging plenty of blame, offering very few solutions. Democratic governors lining up to say they won't be able to contribute to the president's effort to boost jobless benefits. New York's Andrew Cuomo saying, we started with a $30 billion hole, and your solution is to cost me another $4, comparing that to handing the drowning man an anchor. Democrats, they want state aid. The president, he's accusing party leadership of asking for bailout money for states and cities that he suggests were already failing badly. Joining us now is Kevin Cirilli down in Washington, D.C. Kevin, let's start right here. Are there any talks on Capitol Hill today?
There are not. There are serious talks, maybe behind the scenes. But what I can tell you, based upon conversations that I've had this morning, Jonathan, is that stalemate is putting it incredibly mildly. Neither side feels that there's a political incentive for them to negotiate. Now, elsewhere, the president now openly talking about other executive actions that he would like to take. Case in point, the capital gains tax. Beyond that, it's interesting to watch both the politics and the substantial policies that have emerged from the White House over the past week or so as they try to weigh the political ramifications of going it alone by utilizing things like executive privilege while also trying to balance really a broader economic debate in terms of stimulating this economy.
Kevin, the other issue on the table as well now is the president going it alone on something else. A capital gains tax cut. Take a listen to this.
We're looking at also considering a capital gains tax cut, which would create a lot more jobs. So we're looking very seriously at a capital gains tax cut.
Kevin Cirilli, the president can't do this without Congress, can he?
No, he can't. I mean, he could take a more smaller approach in terms of capital gains, but traditionally the way that Wall Street and Washington thinks about a capital gains cut typically would need congressional approval. Remember that he had floated this idea several years ago. It did not garner the type of support that he had originally looked for. But look at the payroll tax. I mean, and in this situation, it's a very similar policy prescription where the payroll tax cut that the president signed via executive order, a lot of logistical confusion, putting it nicely on that front. A similar confusion and uncertainty would be clouded around this unless he were to provide certainty regarding it. But again, and I can't say this enough, we're a couple of months away from a presidential election. This is a tax debate that Republicans do want to have, and that has to be factored into this as well.
Kevin, who is trying to restart talks down in Washington, D.C. today? Is anyone?
You know, I mean, it's a great question, and I don't have an answer for you because because when I talk to sources, I sound like a broken record, but when I talk to sources, it's just it's two different ideological approaches. One in terms of providing incentives, the other for Republicans, and the other for providing actual money from the Democratic perspective. But I still, and I said this point earlier, Jonathan, and I was following up with some sources just within the last hour and a half, and I still want to note, even the benchmark that Republicans are talking about, $1 trillion, that's a hefty chunk of change.
Yeah.
And so I think from that perspective, there's palpable frustration from Republicans who are suggesting, that $1 trillion is still a lot of money.
2020, when $1 trillion seemingly isn't enough for many people. Kevin, great to catch up with you. Stay close, just in case we get that VP announcement. No one knows when it's coming. They're expecting it at some point this week from the former Vice President, Joe Biden. In your equity market, equity futures up 19. We advanced 0.6%. Coming into today's session on a 7-day winning streak on the S&P 500, within 1% of all-time highs. Joining us now is Sarah Bianchi, Evercore ISI Head of Public Policy. She joins us on the phone. Sarah, pretty much everyone we speak to says the same thing. $1.5 trillion bill, they'll agree it will get done. Everybody has faith in Washington getting something done. What would shake that faith, Sarah? What would you need to see to say this isn't going to happen?
Well, right now, it really looks like it's not going to happen. As you all have been discussing, there's really no external pressure. Nobody really feels the need. The markets aren't providing the pressure that's often needed to get this across the finish line. And Republicans who are in vulnerable seats aren't pressuring McConnell. And the White House doesn't feel the pressure, even though, a stimulus check that goes to millions of Americans would be a good boost for President Trump in the middle of an election year. I do think that the reality is they're not that far apart substantively. They kind of agree on the small business. They kind of agree. They're close on unemployment, but they're going to have to come together and hammer this across the finish line. And right now, it looks like that may not happen this week. And if so, I think it will move beyond the convention.
Sarah, we heard it again and again in the last 24 hours from Democratic senators in response to the President of the United States. We heard it from Newsom, we heard it from Murphy, we heard it from Andrew Cuomo as well. They want help. Sarah, does anyone in Washington outside of the Democrats want to give them that help, that state aid?
Well, I think that Republican governors know they need the help, too. And look, it is a really good, I think a good messaging point for Republicans to say this is about a bunch of bailout money and think of, blue states with pension problems. That's a really good talking point. But the reality is Republican governors are feeling the same pressure. Their revenues are down. Their spending requirements are up. And so that's why they put money for K-12 schools in their own bill. So, it does take a little bit longer to feel the impact. If you don't do state and local, you see taxes go up and spending go down just at the wrong time. But I can see why that pressure point is not being felt at this particular moment by Republicans.
Sarah, do you think there is a cutoff point where talks can no longer happen ahead of the election? We had a similar experience going back to 2008, and we could still get things done. Do you think there is a cutoff point? And if you do, where is it?
Well, I thought they were going to try and do this in August. That was the plan. And I do believe that if it had just been Mnuchin, Pelosi, and Schumer and McConnell in a room, they could have come up with a deal here, because I don't think the bid-ask is that far apart. Now I think the risk is we're going to move this past the conventions. Nobody's going to want to talk about this when they're rolling out their vision for the country. Then it comes back, and the reality is we saw this with TARP in 2008, as you mentioned. If the markets and the people demand it and apply pressure, you can do something almost up to Election Day. Without an external pressure to get them back here, I think that, September is probably the latest you could see, the first couple weeks of September, and then they'll be off in campaigning.
Is there a permission to read between the lines? There was a Washington Post story on this about White House Chief of Staff Mark Meadows. Are you saying that if Mark Meadows is not in the room, they can get the deal done? What would it take to change Mark Meadows' way of doing things to get a deal done?
I think there is a perception that Mnuchin has been, giving the store away in the Republican Party. I think that Meadows has now been put in there to kind of stop that narrative. But I think that what needs to happen, if to get the White House across the finish line, is Donald Trump needs to say, I need this deal. And from our minds, at the end of the day, the president is benefits or blame from the economy. So if I were his campaign manager, that is what I would be saying.
Yeah.
Because again, I think a stimulus check in October with your name signed on it is a very good thing for a president up for re-election in this environment. But he's going to have to say that, and he's going to have to demand that Meadows get out of the way. I do think the Post is right. I think he's been a real sticking point here.
Sarah, we are on VP Watch as well. I'll ask you a very narrow question. I ask it specifically, exclusively from the perspective of financial markets. If it's anyone but Senator Warren, does it really matter to this market?
Nope. It doesn't matter. These are all very, very qualified women who each bring something in their own right. And this is all about, Joe Biden's personal preference and who he believes can help unite and excite this party. I keep reading stories about what the number two's view on big tech or healthcare, all of these issues. They're the number two. That's how it works. Just ask Joe Biden. He did the job for 8 years. It doesn't matter. Of course, they will have an impact in many, many ways, in many, many places. But on some of the issues that I think some of our finalists are experts on, I don't think that's something the financial market's going to really worry about.
Hey, Sarah, great to catch up with you this morning. Stay in touch, won't you? Sarah Bianchi there of Evercore. Coming up on this program, US-China trade tensions escalating with talks expected later this week. Alpha Omega's Peter Cicchini discussing the market implications next on this program. 20 minutes away from the cash open in New York City, coming into Tuesday on the longest winning streak going back to October 2017. Equity futures up 15. We advanced 0.4%. This is Bloomberg TV.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
We did a phase one deal, and it was a wonderful deal, and all of a sudden it means very little. We view China differently than we did 8 months ago. I don't know that we want to have a deal with China.